Welcome,
Hey,
everyone.
good morning.
Good morning, everyone, and good morning, Dirk.
Good
How's
morning,
it
Jonathan.
going?
Good morning, everyone. Back from the dead, I am. Yes. Sorry for
Yeah,
missing out last week. I had the brilliant idea of eating sheep sushi. Yeah, which was not as brilliant and as a good deal as I thought it would be. I regretted
no,
it for the rest of the week, really. But man, what a market this morning already, huh?
yeah, wow. We're getting some really exciting moves here. I managed to enter a long position on the S&P 500 before the market closed last week, right before that strong bullish candle. So I'm a good position on the S&P 500. Can't really say the same about my other swing positions. Definitely pulling back quite a lot with the strength from the USD. And then we have, of course, we got Bitcoin. We got Trump coming out announcing not a Bitcoin reserve, but an actual crypto reserve with like XRP, Cardano. I don't know what to say. I don't know what to say.
Isn't it? It's insane, really. What a move here. Let me quickly share my chart here on Bitcoin. I really, it's the funny thing is, not lying about this, and I didn't expect it to turn out like this. I was like talking to my community. Actually, Sunday in the like before lunch, I always write like a little bit of a market forecast, what I expect the next week for legacy markets and for cryptocurrencies. And I said, well, I feel like if this bull run still, like we are still within the normal territory, when it comes to correction, because we didn't extend by 30%. We stopped here around 28 to 28.5%. I said, anything up to 30% is still normal. However, in order to continue this bull run and still be able to kind of hit the target here between April and October, late April and late October, that is, we really need to see something like a V-shaped recovery, like with a quick return to 100K. And well, little did I know that for once, I think that's also a first timer for me, that Mr. Donald Trump would tweet something that actually played into my cards. I mean, that is crazy what is happening there. And I rarely have seen not only crypto, I mean, the same to an extent is true for stocks, the same is to an extent true for Forex also. Markets that are so politically driven like we are seeing right now. It's like everybody's always anticipating, hey, when is the orange guy going to send out a new tweet? What is it going to be? Is it going to be something great for the position I'm currently in? Which overall leads to this basically risk-off sentiment we have a bit now. However, if I look at the charts, of course, things looking much better again now. Same here for the S&P 500. You guys might remember that I always advocated within this bull market, once we see the pullback here to the support bands, bull market support bands, that this usually is a very good time to buy. And we saw the same again here. We went under them. That was last week, Thursday, just to really have this bullish candle that you were talking about just now on Friday again. Yeah, it's really a sanity. And I try to keep my position size very low at the moment. Got lucky, by the way, with a couple of gold trades also last week while I was trading from my laptop in bed because I was so bored, alternating between my laptop and the toilet. Sorry, I don't want to paint pictures into your head. And yeah, got a couple of good trades there. So we can talk about this later. Pretty hyped about that. On a low scale though, because you guys know gold, scalping, day trading is still something new for me, but you gave me that challenge. And of course, I'm going to do my best to do that to the best of my knowledge and capabilities. Classic bathroom trading, Henry, absolutely right.
Yeah, classic
charts
bathroom
and other
trading.
stuff. Yeah. So really hyped. I think this week is going to be very interesting once again, not only if I look at the charts, but we have a plethora of data coming out already, starting with inflation rate in the Eurozone coming out in, 18 minutes from now. We later on today have the ISM manufacturing PMI. Also quite important to see, do we see like effects of those not only talks, I mean, they're becoming reality now, the tariffs in the USA on the manufacturing. in the USA. We, of course, have an interest rate decision on Thursday, and we have the almighty non-farm payrolls on Friday again with a lower expectation. I'm wondering on that one if the expectation is really low enough already, or if we are going to see the effects of the talks about tariffs and all the other weird political talks and screaming that happened in the White House also the last days. Don't want to further go into details there now. I think everybody saw that as well. Are we going to see the effects of it already on the generation of new jobs in the US economy? I think yes. I wouldn't be surprised to see that number coming in lower, not only because of all the government employees being resigned at the moment, being fired or being forced to resign in some cases also, but also because this for sure has effects also on all the individual business, especially the businesses that are not large corporations with billions, on the sides already, that can live through hard times just through their cash flow. But this especially is something that affects smaller businesses. And we've seen, for example, prices of X. I don't know if that is fake. I saw somebody posting a picture of a carton of X, 10X for $43. I think you have to lock this in a safe probably by now. And I don't know where this notion of Donald Trump also comes from, that tariffs are going to bring money into the USA, that those are paid by the exporters and not by the importers. And then
But that's not how it works, is it?
It's not how it works. He really has something mixed up there. The business that is importing has to pay the tariffs, and they are going to give the extra cost. Of course, they're going to add this to the sales price of an imported product, so the consumer has to pay for it.
I think the only way that you would, I believe, create a scenario where that would make sense is if you have two products of equal quality, but one is cheaper because it's from, let's say, China, and if you put tariffs on China, then that product will perhaps become more expensive. So you go for the cheaper option, which is made in America. I think that would make sense, right? But to have that idea that China has to pay the tariffs, that makes no sense, because it's the consumer and the importer that has to put that value onto the price for the retailer.
I get it in a way, if it leads to something like, instead of importing aluminium from China or wherever, we are going to do that in our country now. Again, for ourselves, the question always is, of course, is this still cheaper than the imported price plus the 25% or whatever the tariffs are for that, or is it still going to be more expensive? But it's really weird. And sometimes I wake up in the morning and I say to my wife, somehow I wish it would be 2004 again.
Yeah. No, Henry says something good here. Tariffs discourage import, they encourage to buy locally. Yeah, it does. So if you have an equally good, domestic product, then you want to go with that if it's cheaper or the same price. And I think that's kind of like what he's trying to do there. But it's going to be very interesting to see what we have.
That's nothing that's going to happen within 4 years. We're talking about really long-term things here. And I'm showing the gold chart here quickly now. It's very interesting. I actually did a short trade there earlier that I opened on the top signal there. However, I wanted to trade it down to where we are actually right now, the 200 moving average there. Exponential moving average, that is. However, I was stopped out on this trade. Where do I have my? Is there a web version of MT4 available, by the way?
Yeah, I do think that you. I don't know if that has to be specifically for the firm. So the 5ers has to have a specific web portal, but I do know that MT5 and MT4 is available on in the browser, but not sure exactly how that works.
That would be kind of nice as well. No? So what I did there on the top signal, I shorted a little bit here, was stopped out almost at the high, but this is how things sometimes are. It was a good signal nonetheless. right hunch there, poor execution from my side, but cannot take too much risk on the trade. Nonetheless, the account is a little bit up here by $320. So I had some really decent trades in between, which I'm very happy about. And yeah, still trying to kind of get the hang there of it's not only trading in new assets. For me, it's also like getting used to using the MetaTrader for trade execution again, because I haven't used that one in a long time, because I usually do my Forex hedges where I have my Forex positions open, which is usually with Saxo Bank. So it's like kind of, I don't know if you can relate to this, Jonathan, like getting used to a new interface again. I'm always afraid, am I clicking on something wrong now, or double clicking, or stuff like this, if you get what I mean.
Definitely. I mean, I mean, as a trader, your trading platform is your, that's where you live, that's where you make the money, that's, all the orders and the execution, that's at the very core of what you're doing. So you need to have a very good understanding of how it works. So if you go from one platform to the other, then you need to know all the details, because it might be the case that you see that you have unexpected news coming up and you need to close the trade. Well, if you don't even know where the close button is, that's going to be a problem, right? So you need to be able to be quick and understand where everything is. I think it's more important with day trading and scalping, of course, to be able to take those quick decisions.
Especially in these markets. I just had this before we started this live trading session. I said, I need to take care of a position, because I was in a long trade in Cardano that I opened a little bit earlier, and I wanted to manually close it. Now was trading this position on 3 different accounts, actually. So I managed to close it on the first account with a nice profit of $200 and something. But by the time I was at the second and third account, it was down again. So I'm still in that position, and we are talking about like 3-4 seconds here of time delay. So much volatility there currently in the market. Rupesh is asking, what indicators are those? These indicators, well, the one in the middle, the blue line, is a 200 exponential moving average. The other indicators are my proprietary trading indicators. However, you can do the same when you learn something like price action. So, for example, if you pay attention to what Jonathan is telling you, if you pay attention to what also Victor is telling you, it's more or less kind of the same, adjusted to what I'm looking at, what usually works very well for me. So no rocket science there, but I like to look at things like this. Jonathan looks at things like in a different way, Victor looks at things in a different way, and we probably could go on and for everybody who's always here on the live stream. But nonetheless, I want to see if I can catch some trades today in gold live here, of course. Again, what are you looking at today?
Well, we have a poll in the comment asking people to vote on which pair I'm going to be trading, EURUSD or gold. Let's run the intro first for your segment, and then when we have that intro done, we're going to be looking at the poll and we're going to be selecting a pair. It's probably going to be gold, and then we'll see if we can find any live trades. All right, see you in exactly 15 seconds.
Oh, that is so
all right.
nice.
There we go.
That
Awesome.
was such a pleasant surprise. Thank you. When did you do that?
Yeah, nice,
amazing. Huh? Very nice.
Yeah, you haven't seen it, have you?
I haven't seen it, no.
Nice.
Probably you had it ready last week and were disappointed that you couldn't use it.
Exactly. I did have it ready, but I couldn't run it because you were busy eating sushi.
Yeah, or whatever that was called. Yeah. So
all right, so let's take a look at the. I'm going to take a look at the gold, not the gold, the poll, and what we see right now is we are seeing gold leadings. We're going to be ending that poll, and right now we have gold as the winner of that one. 61% wants me to trade gold, and as you're going to be trading gold, I think that sounds like a good thing to do. I did trade. Because I'm gonna trade gold here on my 5K high stakes account. I'm at around $70 from getting stopped out on that one. So we'll see how that goes. Okay, so probably first analysis, I probably gonna do in trading view. So let me pull up my chart first here, and then we can see if I find anything, and then you can take a look at your chart.
Go for it for now. I need to add some more EMAs if we want to catch some trades here today.
Actually, you know what? Maybe you can look at your chart first. I think people want your opinion on gold. Actually,
okay,
let's open up yours.
So yeah, I saw like a question earlier from Hamid also, who said like what my analysis is on the Friday news on gold. You know, I wish I could tell you that X or Y is going to happen now. I don't really have an analysis regarding the news on Friday. What we saw again, of course, is that we saw basically, you know, kind of the same moves we're expecting. So we are still in a local downtrend, I would call it. Like the major trend, of course, is still up. However, like this local structure here now is a sideways structure. That's why I'm okay to trade positions from both sides. If you would have asked me last week, I probably would have said I would prefer to trade only top positions or sell positions on this one. I think now it's more neutral. I think a lot this week, especially when it comes to those non-farm payrolls on Friday, is going to be about the economic news and what that tells us on gold. So maybe, you know, this is something we can discuss next week when I have a clearer picture of what is going on with the US job market, because so much depends on that. Not only what I'm saying here, also especially from the side of the Fed. I mean, we have an interest rate decision in, I think, 16 days again. Of course, these non-farm payrolls and subsequently what the Fed is going to do with them is this going to indicate again interest rate lowering are going to have a major effect also on gold. Not only that, of course, also always do we see US dollar strength or do we see US dollar weakness? At the moment, we are seeing more strength, which puts a bit of a strain, of course, on the conversion rate gold to US dollar. So my hunch, if I just from my stomach, my gut feeling, educated guess would be at the moment, probably we are heading more towards 2,800 than we're heading towards 3,000 at the moment. But that can change at any time, really, because it, like everything at the moment, it really depends a lot on what is coming from the White House in terms of tweets, in terms of tariffs, in terms of other ideas that we maybe do not think about there yet. So, of course, here this scalping session has nothing to do with what the long-term picture is. What I want to do is I want to add 2 more moving averages now and 1 moving average. Let's make that one. Do we have a red one, right? No, we don't. Make that a little bit thicker. I'm going to make this a 50 moving average. And the second one here, going to make that is 21 moving average. Can make that yellow, also a little bit thicker. And what I want to look for now is so-called continuation patterns. So typically that would mean now it looks like we were deflected here again by the 200 EMA. Remember, these are Heikin Ashi charts, so they look a little bit different than your usual candlesticks. In this case, not that different, but sometimes there can be deviations of those. So typically what I would look for now is a pullback here, maybe to the 21 EMA or the 50 EMA to engage then in a long position, aiming at seeing a new higher high here. So that would be a typical continuation pattern, not like a 100% pristine kind of signal that we are seeing here. But for the sake of it, if we see now a pullback, let's say to the yellow line, the 21 EMA there first, I would do a very small long position, just, you know, for the sake of it, to try to show you how would I in a scalping session typically try to engage with this market right now. That's basically what I'm looking at. So
okay, I'm currently going long on the
short.
Oh wow, I'm wow, what a rookie mistake. I'm looking at EURUSD. I have EURUSD open on MT5 and I'm looking at gold on TradingView and I'm setting the orders. I'm like, it looks weird. It's not this. It looks different.
If you set limit orders like at 2H, 6-2,
Yeah.
I don't think you need to worry about getting executed.
So that's a weird risk. That's a weird entry. It's like risk to reward like 2,000. So that's something wrong here. No, but I am actually looking at a flag, a bull flag on gold on the 50 minutes, a type of bull flag pattern. So that's what I'm going to try to.
2 order positions now as well. Sorry.
That's what I'm going to be trading now. I'm just going to enter the position here, and then I will show you.
Do you want to? I'm going to. Shall I add you? Or?
No.
You're on the MT5 right now. Okay,
I'm just busy entering the order, so I'm going to switch over to TradingView here. Okay, so what is a bull flag? Okay, so a bull flag is a strong move to the upside, makes a flagpole, and then price enters a descending channel like this. That's the flag. So you have the flagpole, and then you have the flag. Now, when you have a break above the upper trend line, that's where the pattern is confirmed. So when you have a break above here, and I also want some extra confirmation by breaking this high, the previous high, that resistance as well. So that's the confirmation. Now, the way you trade a flagpole is you use the measured move. And for most patterns like this, the measured move is from the, like on this example, it's from the low of the pole to the high. And then you take that from the breakout and you double that. You enter on the breakout or the retest of the trend line, but on the breakout, stops below the lowest point in the flag, and then TP at the measured move. So that's how you trade a flag, a bull flag. And if we go to gold, I am seeing this, where you have, of course, you have the downtrend like this. We have a strong move to the upside. And basically what I've done here is I've basically just filled this gap. I'm just thinking that because the gap is filled here. On that wick, the gap is filled. So I'm just going to assume that we have price action in that gap. So that's the flagpole, and this is the flag. Get the breakout, and then you take from the low to the high, and you double that from the point of breakout, and it comes up to this level at around 2,900. So I'm just going to add a resistance. Now, of course, it's important when you trade these patterns that you do so in the context of the overall market structure. And if you go out to, let's say, the 4-hour, or what we have here on the 4-hour is the area where we broke down previously. So I think this is a good reaction for a possible move to the upside. So the trade that I have open right now, I got in a little bit too late on this one, but I believe that my entry is here. So you can see that it broke above that previous high right there. Then it came down. Almost
I also just re-entered, by the way, at 67.5.
67.5. Okay. Well, I think that looks good. So my stop loss is below the lowest point of the flag, which is here, and then my TP currently is up here for 4-hour. But what I'm going to do is, actually I don't have a TP here, but what I do need to do is I need to select the TP that not only goes with the measured move, but also makes more sense in price action. So I think what I want to do here is I want to take that level as my TP, and I'm going to lower it some. I want to sometimes, every time I go into settings and I look to set my TP at specific numbers. I always want the last number to be a specific number, and that's always going to be like 4 or 7 if possible, because 28.95 is a level where a lot of people have their orders. 28.90, 28.95, 2,900. So I look at it in increments of 5, right? So half, right? So at even numbers, and then a 5, and then the next even numbers. I think that's where I've seen that you have most of the orders. So if we're going long, then you want to be below that 5. So you want to put it at 4, right? Right here. If you are going short, you want to put it at 96, right above that 5. Now, of course, because gold has, if I move it down $1, it goes down quite significantly. But I actually like that level. And that's the 3R, which is absolutely good. So 28.94. Now, if you want to front run that level, because a lot of people have this thinking, right? So for a lot of people, 28.94 is also an even number. So you might want to move that down to 28.93.99, like 94.7, right? So you're front running that level as well, never having even numbers. And then TP, put that right there. That's a 3R trade, very good. Going into MetaTrader and adding that TP in there. So let's see, I'm going to pull up MetaTrader here as well to make sure that you see that as well. This is the trade on MetaTrader. There we go. That's a very tight stop loss, but it's been tested twice. So I'm thinking, yeah, let's go.
Yeah, that's my trade here on MetaTrader. As I said just now, 2,867.5 my entry, 63 my stop loss, which is just under the last low we had, because I think, and bear with me a while, I need to switch back, of course, now to the other one. Where is it? Share screen. And out of 1 million open screens, it should be this one, which, which is a trade like this. So basically, risk reward, I would bank on, seeing a higher high somewhere here in the 70s, somewhere between 72 and 74 maybe. Risk reward ratio 1 to 1.3. I would be okay also to have a risk reward ratio when I'm doing stuff like this under 1, even something like 0.7, 0.6. Because the lower the time frame, at least from my experience, the more noise you will have, the more you need to be okay. As I said, just from my experience, to also have sometimes trades with not such a favorable risk reward ratio. So let's see how it goes. I said it's not the optimal trade, in my opinion, the optimal trade setup. Nonetheless, one that is okay to trade because it's banking on a pattern continuation here. Why my stop loss down here? Well, basically, if we go down here, then that would mean that we had a higher high here, a lower low here, a lower high would be this one then if we go down now, and then probably somewhere here a new lower low. So the mini structure really on the 2-minute chart here would be then that we change into more bearish market. So I would look for opposite trades then. That's why my stop loss is where it is. Of course, can always be, that we go down there, I get stopped out, and then the market reverse. We all know things like this can happen sometime, but what matters is, and what Jonathan also showed you just now, is that you have the plan. I want to do X and Y, because if you just enter the trade and make up your actual trading plan along the way, I can guarantee you that is most of the time it's not going to end well. You're either going to take your profit too early, or you're going to start stuff like, oh, I'm going to move my stop loss away from this position. Now, hey, we have somebody famous who joined us.
Yeah, I wonder, like,
Barack Obama.
Yeah. Welcome, Obama. Hope you're doing good.
Sir.
Welcome to the live stream. Sorry about Trump. It must be causing a lot of issue over in the land of the free. You're welcome to join us here. If you have any stock recommendations, I know that you probably have some friends in Congress like Nancy Pelosi. Maybe if you do have any tips on what stocks to buy, then hit me up.
Like the trade of the century, Nancy Pelosi.
Yeah. By the way, did you see the whale position that hit open a couple of hours before the announcement?
Yeah, weird, no?
I mean, that's coincidence. It's so obvious that the Trump family did inside trading. Yeah, well, look, I'm not going to accuse the Trump family. I'll take that back. But really, kind of like what it is, because you had Trump coming out talking about the we thought it was going to be a Bitcoin reserve, but it's actually a crypto reserve. So he came out, talked about crypto reserves, and a couple of hours before that, someone entered a long position worth like $50 million, and he made, I believe, 5-6 million in a matter of hours.
Yeah.
It's like enter before the announcement and sell right after the announcement. That's insider trading. I mean,
that is insider trading, but it's so. You remember? I think we talked about this like a couple of months. Also, there was some interview with some. Was it a senator, a politician? I don't really know anymore. Maybe good that I don't know the name anymore. And he was asked like, "So you own like a jet that is paid by the taxpayer or something?" He said, "No, I don't own a jet. No, I never owned a jet." Well, it turns out his wife is the one owning the jet. Like it's
yeah.
like, oh.
Yeah, no,
I don't know what to
there's
say
so
to
much,
stuff like this. So. Yeah,
so much
see,
corruption. It's
Barrack also
absolutely
says here
crazy.
Trump needed to pump his crypto backs. That actually was kind of like my first thought after that tweet as well. It's like, which one of his buddies asked him, "Hey, can you tweet something nice about Ripple? You know, I got some backs there, and I'm going to share my profits with you." I'm, like you said, not wanting to accuse somebody here, but it's just the first thought that came to my mind there. Really, yeah, gold. We have to wait a little while now. What we could also see, like it is very often on a Monday morning, of course, is that we kind of enter a sideways
How
range
should I
now.
say it? Did I kind of?
You get stuck
What
right
happened?
now.
Okay.
You froze up because you're so afraid of gold. Maybe.
Yeah, it's good. It's good now though. Is it better?
Yeah, can hear you. Sorry.
Okay. Okay, so we have Peter Schiff, right? Peter Schiff, who is a notorious like crypto hater, Bitcoin. You know, doesn't really like Bitcoin. He's very into gold. Obviously, his father was also very good in big in gold. He went out and he said that, you know, he understood why you would want a Bitcoin reserve, and he actually said that Bitcoin would be the digital gold. Like that, this comes from Peter Schiff, which is a big thing. And then you have is it Brian Armstrong, I believe, from Circle, the company behind Coinbase, coming out and saying that a crypto reserve should only include Bitcoin.
Yeah,
so
exactly,
it's like, and so here you have Peter Schiff saying that, and the CEO of Coinbase. But then Trump comes out, and in the first tweet, he doesn't even mention crypto. I mean, he doesn't even mention Bitcoin.
Yeah,
he had to like retweet that and quote it and say, "Of course, Bitcoin and Ethereum as well." And it's like you're missing the point completely about a Bitcoin reserve. You know, it's just he has obviously no idea about this, because he's like, "Oh, we're gonna make America the biggest crypto hub, and we're gonna like support American cryptos," and it doesn't even mention Bitcoin. It's just wow, you know.
Yeah, that's sometimes it's a bit like, don't know, like it reminds me sometimes of the attention span my daughter used to have when she was like 4 or 5 years old. You know, it's like every 5 minutes something else becomes important. However, don't mind me, please. You know, guys, I'm always happy to share kind of my political views as well. I shouldn't do that sometimes. You know, I also, for that matter of fact, I saw also interviews with Donald Trump and Elon Musk where I thought like, hey, that makes a lot of sense what they are saying there. And I remember before the election, there was this interview where he was like on a podcast for 2 or 3 hours with Joe Rogan. Yeah, you might can think, of course, of Joe Rogan also what you want. But for me, it was kind of amazing to see like, hey, this guy is able to speak in without many ands and ers, and without thinking a lot, and with making a lot of sense for 2 and 3 hours straight. I mean, this is something probably you cannot even expect from somebody who's 50 years younger. So it's not all bad.
And I mean, but you know, as traders, you know, as traders, we kind of have to put it into. I mean, I I don't know. It's I don't know. As traders, it just feels like it's just kind of like we're just waiting for the next outrageous tweet,
Yeah.
the next weird post that will move the market. It's like we're living in a a TV series here where it's like
Yeah. Didn't
there's
somebody
one
say
guy
like
that
it
little
seems like we are living in a live version of The Apprentice, this show back then, you know, TV show of him with where his famous sentence came from, "You are fired," and
yeah.
it's a little bit like this, yeah. Right now, as a trader, this is a situation I don't like at all because there's this one variable, this one risk factor which you just cannot take into account when the markets are so prone to what one person is tweeting. It's a little bit like 4 years ago with crypto and Elon Musk. I don't know if you remember that back then, where like we had those pumps and dumps all the time when Elon Musk was tweeting something about Doge, for example. Back then, Doge was only a cryptocurrency. Now it's also State Department, as it seems.
Yeah.
And
Oh, I remember it, and he really moved the markets. Like
absolutely, yeah.
Yeah.
Absolutely, a bit crazy. Are you looking at anything else at the moment? Are you in other trades?
No, well, I am in quite a few trades when it comes to my bigger portfolio. I think one of the more interesting one is definitely the S&P 500
That
long,
was
which
a
is
good comment, really. I have to say that.
yeah.
And I saw that close on Friday. I also thought, damn, man, I should have bought a little bit today, but
Yeah,
I was
I mean,
too afraid of what we saw on Thursday. There, this crash
for
candle, really.
me, last year I made most of my money on just a few trades on the S&P 500, and I've seen that the S&P 500 is like when you have these, you know, these panic dumps or whatever you want to call it, when there's capitulation. I don't think that's capitulation though, but when you have these enormous liquidation cascades and the market is just completely puking, the S&P 500 will either go very, very low down to a support level and bounce, or it's just going to break through and potentially start like a bigger move to the downside. It's very like whenever you have a good confirmation of price action bouncing on support on S&P 500, it is such a good time to be buying, I believe, with you know, big stop losses. But I mean, there's definitely an edge in being, you know, long only on indices on the higher time frames. When they hit a level, you want to be buying. Like, look at this level here, for example. So we hit, I mean, one of my first you know what I just realized? I realized I forgot something in the oven from yesterday.
But I hope the oven is not still on.
No, I turned it off, but I forgot to take it out of the oven. So
Okay.
now we have food in the oven, and it's been there for like the whole night. Okay, interesting. Interesting how my mind works and just comes up with that.
I
Okay.
wonder how that connection was just made in your synapse in the brain. S&P 500, oven, food.
As a dinner, you know, this is bread. You know, puts food on the table.
Wow.
Make that bread.
Exactly, yeah.
Yeah, so we can look at this level. We hit it once here, twice, 3 times. The 4th time going below, also very good buy, and then the 5th time. Every time we hit this level, it's a good buy, and it's going to be a good buy until it's not a good buy. And that's the way I look at trading. Basically, if price comes down to a good level, I'm going to buy that level until it's not a good level anymore. It's so simple. Like how it's so simple. It's so simple.
It is so simple. And this is what I also meant when I was showing my S&P 500. I'm just going to add mine here quickly. It's really like you see the bounce back to the bull market support bands there. And every time, if the market is still trending, this is a great opportunity to buy. Now, as I said, I was a little bit chicken feet on Thursday there. In hindsight,
Did you say chicken feet?
Yeah, chicken feet is not like scared.
Chicken feet.
Or maybe that was just the literal translation from German.
I gotta go with that. What is chicken feet?
We Germans like to do that.
Okay, chicken. Okay, help me out, chat, in a comment. Is chicken feet a thing that we say in English as well, or is it just a German thing? Cold feet. That's
Cold
right.
feet.
It's
Yeah,
cold
thank
feet.
you. Not chicken feet, cold feet. You're
No, from
saving
now
the day.
on, we're gonna say chicken feet. We're
I
gonna say
chickened
chicken feet.
out
I love
because I
it.
had cold feet. Yeah.
Yeah, it's like
Exactly.
chicken out. Yeah.
Okay, so I
But
learned
from
something
now
new
on,
again.
it's
Next
chicken
time, I'm
feet.
just going to make my life also easy and say maybe I was scared. That would have been the
No,
easiest
no,
thing to say there.
chicken feet.
Chicken feet.
Yeah.
Okay, now if I see that's one used somewhere, I know where it comes from. And so as long as we have this trend, and at the moment we see again, that the trend seems not to be breaking, it's a good opportunity to buy that. And it works over and over again until it doesn't work anymore because the structure of a market changes. What we need to see now, of course, is that we go up and that we see a new higher high again, a continuation of a trend somewhere here in the vicinity, I don't know, somewhere between 6,200 and 6,300 probably. That would be continuation of a pattern, and that would bring me comfort because it also probably means that Bitcoin is not yet done. If Bitcoin is done, that would be really something new. I myself, I would really need to overthink my models there as well, because that would have meant that, and that is possible, that our all-time high for this cycle was exactly at the upper green level here from a logarithmic regression. Is something possible? That means that the alpha decay of Bitcoin is stronger than I anticipated. Alpha decay means that over time in assets that trend exponentially, your return of investment from cycle to cycle gets lower until it stabilizes somewhere in the low single digits or around zero. And this is something probably that is going to happen sooner or later for Bitcoin. I would be surprised if this cycle already happens, but it's not out of the realm of possibility.
We have someone in the comments. We have someone in the comments saying, "Please, we need more analysis." I don't think we've done anything else than actual analysis. What pair are they analyzing? We are looking at many different pairs here right now. Dirk is looking at gold. We're trading. No, Bitcoin. He looked at Bitcoin. We're looking
Now
at
I'm looking
gold.
at
We're
gold,
trading gold. We have an open position in gold. In French, we have the question mark guy coming in again, saying chicken's flesh is apparently you're afraid. So, but I do like chicken feet. I'm going to open up a poll in the comment section asking if perhaps we should make chicken feet the official slogan of the live trading room. Yeah, I think that guy wants signal. Yeah, if you're here for signals, then I mean, go ahead. You can copy what I'm doing, sure. But it's when I enter a position, when I exit this position, if I manage the position, I'm not going to give you that. I'm not able to give you those instructions. So that saying, give a man a fish, and if you then teach the fish to multiply itself indefinitely, then that will make you more food. It's very true in the world of trading as well.
I think
Okay,
that's a great question here from Daniel. Is there a way to distinguish between a true retest from a false retest?
Well, it depends. I mean, let's pull that up again. So the definition of a retest is a retest of a level. So it's not about is a retest. A retest is always going to be a retest. Okay, so I think the question here is, how do we know that? Yes, there are actually indicators to help. So I'm going to answer this question. I'm going to talk a little bit about a couple of indicators that we can help. So I think what we first have to define is what happens before a retest. Now, of course, what happens before a retest is a breakout. So if you have a level, let's say I have a support resistance level here, and then get price coming up, hitting that resistance, and then eventually breaking out, you first have to have a confirmed breakout have a retest. And the most simplest way to confirm a breakout is just with time. So the timing aspect, just pick a certain number of hours after the breakout, and if price is above that level after that certain amount of time. For me, if I'm swing trading, that would be a daily candle close. So if the daily opens above the opens below the level and closes above the level, then that's a confirmed breakout. On the retest, now if this is an untested level, right? Now, if price comes down, that's going to be the retest, and it's always going to be a real retest. But the question is, of course, is this the retest that you want to enter? Is this the level where you want to enter, or will price go lower? So there are a few things you can look at. Now, if you're swing trading, you might want to look at what happens with volume once price hits this level. So for example, if you have a strong breakout with increasing volume, then volume confirms the breakout. And then you have decreasing volume on the move down. You have decreasing volume on the move down, price hits the level with an increase in volume. That's volume confirming that there's more interest on this level than it was on the move down. So there's a lot of volume on the breakout, volume is decreasing on the move down to the level, and when the level is hit, there's volume increasing, like a volume spike. That tells you that there's a lot of interest from probably buyers at this level. Less interest from the sellers, more interest from the buyers at the level. And then you can, of course, look for candle confirmation. So for me, that would be a perhaps a 4-hour bullish engulfing candle. So if you have a 4-hour bullish engulfing candle right here, then that would be a confirmation of a potential trade. And then I have oscillators as well. You can look at the RSI, the stochastics RSI. You can look at the MACD. Basically, you can choose any oscillator indicator out there because they're all kind of showing the same thing. I like the stochastics RSI if I'm trading on the lower time frames, and you want to see like the stochastics RSI being oversold when it hits the level. So a good confirmation, a good combination of different indicators could be something like this. Let's take a look at an example here on. Let's look at the Euro NCD. If we can find an example here on Euro NCD. Well, okay, let's go to the 4-hour. Can find a good retest.
While you are looking, can I quickly just share my screen?
Yeah, go ahead.
Because gold a little bit moving up. Now, what I want to do here, I'm going to share my reasoning for that in a moment as well. I want to put my stop loss to a little bit above my break even. I don't want to lose on this trade anymore. So I'm going to put it to 2867.60. The reasoning for that is, and for that I need to go to my other screen again. I really need to find a web version. That would make it so much easier, really. This is this one.
Yeah, well, so we can just switch the tabs.
Yeah, definitely. So stop loss is now basically here where we entered the trade. Target zone still up here. Because my reasoning for that is right now here on the 2-minute chart that I'm looking at, we had this prior high somewhere in this area. We need to overcome this. If we don't overcome this now, chances are that we are going back at least into the channel here between the 50 and 21 moving average, exponential moving average, or all the way down here to 65, where the 200 moving average is again. So it's an on or off situation at the moment. Of course, would be nice to see the continuation, the breakout over this last high that we saw them, so we can be sure also that we are more in a uptrending market structure again. But if that doesn't happen, I'm not going to lose money on this trade anymore. Just as a quick explanation, and I'm going to hand over to you again.
Right. Okay. So, but I think I gave a pretty good breakdown that of how to confirm a retest. Basically, you have, I mean, it's up to you to choose which confirmation you want, but volume is I would say one of the best type to confirm price action. The pair that we're trading is gold. Gold. So. Yeah, we got a breakout here on gold. I believe that we have some good price action here for gold. Want to see that breakout above obviously see a break above kind of like this level here. And if we can get that, then we are good to go, I believe, on gold to the upside. Speaking of volume, the problem in so the issue with volume in the forex market is that the forex market gives us the tick volume and not the actual volume from the, it's decentralized and it gives us only the volume from that specific exchange that we're looking at, and it's not the real volume, it's actually the tick volume. If you want the real volume, you need to go to the CME or the futures market. We can actually go and look at that to see if we can find any good confirmation on gold. So let's take a look at gold. Where do we have the futures? So if we look at
gold futures, COMEX.
I think it's this one right here. We can
That's
look at
probably going to be delayed data, no? Also, I think.
How delayed is it? Do they report it on a daily basis?
What is the current price right now?
The current price is 28.79.
Yeah, then it's delayed by quite a bit.
Really?
I know it's the future. So it's the future. It's not spot anyway.
Exactly. Yeah, it's the future. So I'm thinking, how is the volume delayed? Because they have to report the volume. Does that happen automatically? The volume is not delayed, is it?
But I don't know.
Okay, so we have to make sure that I mean, things like this as an analyst, we need to know. So let me actually. I don't think it is, because the volume is here, and because the volume is here means it's reported, because it's not tick volume. This is on the futures charts. It should be reported.
So what it says here, I just did a quick Google search here, that all of CME Group's data is available on TradingView, as we see, for free in 10-minute delay mode.
10 minutes, okay. Well, 10 minutes is good enough, because we can look at 15 minutes here. So 10 minutes is good. Okay, good. So let's analyze the volume here. And what we can do also is we can open up Oanda below here. So we can actually look at the difference in volume. Okay, so let's add volume. Because the volume below is going to be tick volume, and the volume above here is from the CME, not the CME, the COMEX, but that's the futures market. So as you can see here, the volume is quite different. Okay, so you have a volume spike here. You have a volume spike here, but you do not have the same type of volume spike here. You have a volume spike here on the futures market, but you do not have a volume spike here in the on the Oanda market. Now, in the futures market, this means that this move to the upside is not only and that's actually not a gap as well. So that's the difference between the Oanda and the futures market. This is not a gap. Interestingly enough. Anyway, you can look at this one right here. That's a big volume spike on Oanda, but it's not a big volume spike on the futures market, which means that this is based on the candles. It's based on price action. Okay, it's based on every new tick. If every new tick that comes in is an increase in price, then it adds to the tick volume. So the volume candle becomes bigger based on price action. It has nothing to do with the actual orders coming into the market. But on the futures market, it does. So the futures market show you the real volume and not the tick volume. And that's why volume is not very useful in the Forex market unless you analyze volume on the futures market for that currency pair, where you have, for a lot of Forex pairs, you don't have the futures pair. But we can look at the trade setup here that we have on gold, which was basically we traded it sort of like a bull flag like this, where you had, now of course it's not looking perfect and it's never going to be looking perfect, but this was sort of the bull flag that we looked at. and then it broke out and it retested a support level. Now, what we want to see here is we want to see either decreasing volume in the channel that creates the flag and then increasing volume on the breakout. So what we do here is we zoom in and we look at the volume, which you can actually do sort of technical analysis on volume as well. So we add a level right here. During this whole channel, most of the volume has stayed below this level, and you have a few volume spikes on the bounces and the tops. Of course, a top here, a small volume spike, and then every time it hits the low, a volume spike. What you see here is a very clear accumulation of volume. Volume is picking up, okay? Because not only do you have volume spikes, but you have volume becoming more and more and more, and then you have the breakout. Now, this is the type of volume analysis that confirms the breakout, and this is typical for a bull flag. Now, this would not be possible to do on the Oanda chart because Oanda is based on tick volume, and of course, there's going to be a volume spike in the tick volume when it's just bullish candles, bullish price action coming in, adding to that bullish volume. Hopefully, that explains the difference between tick volume and real volume, and why tick volume is basically useless.
Very good analysis. And we have Victor, who just joined us.
Welcome, Victor. How's it going?
Victor, welcome.
Hi there, everyone. I'm happy to join you guys again. How have you guys been doing? We have some. I'm glad that Dirk is with. I'm sharing the same time space spot on the stream with Dirk because, of course,
likewise,
this weekend was very exciting. I'm sure you guys talked all about it already.
Yeah, we touched base on it and shared our opinion on the reasons for that. And yeah, I mean, it was scary, you know, like going down all the way just to have this V-shaped recovery at the moment. I mean, we don't know when the next tweet is going to come out. And maybe it's going to be something like, we're not going to have a reserve in Bitcoin. We're going for Ripple and ADA instead. You never know. But I also said, I mean, this is not only true for what we saw in crypto. I think in a way, it's also true for a legacy market, especially also for something that we trade here for gold, for euro dollar or the US dollar in general. It's kind of scary as a trader when you have to trade in a market that is so much influenced by one person's tweets, like it is at the moment. That really makes things difficult and brings me to the edge sometimes, I have to be honest.
Yeah,
never a dull moment with Trump, right?
Never a dull moment with an orange person. Yeah.
Guys, I'm gonna have to leave. I'm gonna get some. I need to
get the food out of the oven.
Yeah, get the food out of the oven. You know, like get some lunch, because apparently the lunch that I was going to eat is not eatable. All right, I'll see you guys later. Okay, we're trading gold. Maybe Victor, you wanna look at some interesting trades on gold as well, or you know what? Let's ask the audience what they perhaps want you to trade. But I will be back in just a bit.
See you later, Jonathan. What do you want Victor to trade, guys? Shall he also trade gold? Do you want him to trade euro dollar or something else? Share with us here, and then in the next 5 minutes we are going to see. Can you actually do a vote or something on YouTube?
I'm not sure.
Are we just going to monitor the chat here and then,
yes,
get a rough overview of what we said? Maybe I bring you up to speed here, what I've been up to today. So I said earlier I was actually in a short position in gold, which I entered here. Was, however, sadly stopped out or almost at the high. Re-entered now here at 67.5. When we came back to this zone here, I decided then, after we touched the former high again, to put my break even, to put my stop loss to break even, because basically my reasoning is here: if we don't overcome this little area of resistance that we saw here from the last high where we deflected, then chances are that we are probably going to move back to the 200 EMA. wait then, for the US traders later to come in, where probably volatility is going to pick up again. But by the looks of it, maybe it's going to give it another try now to overcome the zone. So right now in a long trade, entry at 67.5, stop loss at break even, waiting for the breakout to the north.
Nice. I like that. I like that very much. We have a lot of bullishness coming to the market when we see euro dollar, for example. It's been very, very bullish.
Yeah, that would be very interesting for me. Like if you can say a couple of words about euro dollar.
Euro dollar is very interesting. Let me check my chart so I can show people in the audience, our esteemed viewers. All right, so this is my chart. And we have one thing is we are, of course, we had on the, I've been saying this so many times, actually every stream, I think. We have been in a weekly demand area, right? And that weekly demand area very nicely, and let me show you why that is. That's the weekly demand area, which is a huge reversal pattern on the weekly time frame, which price is reacting off of now very nicely to, and it's been doing that for the last couple of weeks already. So it's nothing new. But on the daily time frame, we saw that Quasi very nicely being formed, coming back to that entry order block on the daily, and it hasn't completed the sequence yet, or the formation, right? So initially, if I zoom out on the bigger picture, I'm still expecting price to eventually take out this high and possibly continue to go somewhat higher. How much higher is difficult to say right now, but that's the reversal pattern. Reversal patterns don't typically present themselves just to indicate they want to go. They actually go, right? So the reversal pattern completes when we take out this high, which is that's on euro dollar at 0533.3, right, according to this price feed. So I'm still expecting that, and today's move is of course in that direction. So it makes sense that maybe we get this catalyst. Maybe now we're gonna go for that high, and then, however, if I zoom in on locally, right, not looking at anything from the left on the weekly time frame. Yes, I'm looking at the weekly time frame, even though I trade on the minutes. It's important to know what's happening. If we look at the local, right, the very recent price action, right, very recent price action, not considering the Quasi on the daily time frame that I indicated, what do we see? We see an outside bar, which closed last Friday. Why do we see an outside bar where supposedly we are in a bullish order flow environment? We shouldn't be seeing this, right? This candlestick pattern where you have a very bullish engulfing, a solid bar, which is huge in terms of its, it didn't go from the open, it didn't go much lower, and it closed very close to its high of that week. That makes sense. That is in synchronization or in sync with what you expect from this weekly demand era. But what are we seeing here doesn't make sense, or at least it's not aligned with what's happening. So my question when I see this is this the beginning of something new, right? Meaning we're not gonna get that completion of that reversal pattern on the weekly time frame. We are perhaps going to retest that and go lower. Maybe I should choose the arrows. They look better. Let me choose the arrow. Maybe are we coming back and gonna get this? Is this new reversal, that outside bar, is that a sign of something, something new coming up? Meaning, are we going to eventually continue lower? And that would fit, the super macro time frame even higher than the weekly, where we are on the higher time frames, right? If you look at the monthly, we are in a the structure of market structure on the higher time frame, we are in a this is just a retracement in a much larger move to the downside. We're talking about years, right? This is the monthly time frame. So on the higher than the weekly, we are still and we just broke that low from October 2023, meaning we may have started a new downtrend. On the weekly time frame, we have that reversal, of course, but on the higher time frames, even higher, super macro, we're still kind of bearish, right? We are just flirting with that bearish trend. So if I go back to the daily or the weekly, that brings us we have two scenarios, right? Don't we always have like two scenarios? But this one, we have two scenarios where it's not very clear to me. On one side, we have, of course, that bullish reversal pattern, which I think is still completely valid. But then why do we get this outside bar today? And when I see this, a very strong price action against the rest of the narration or the story or the narrative of the price action that the story that the market is trying to tell us, I perhaps it's still two options, but one is perhaps this bearishness that's coming in, right? Because if you have a bearish outside bar, what does that tell us? That tells us that the sellers are coming to the market, right? And that's going to be visible for everyone, right? It's on the weekly time frame. You're not going to miss this. Sellers are coming to the market. Maybe the market is going to trick us. Maybe this is the way for the market to get some liquidity, some fuel to shoot much higher, because the reversal pattern on the weekly has a lot of arguments to it. You have the weekly to the left, you have the daily reversal pattern. What about, that's just a speculation. It's not something I can trade on yet, but just one scenario that I'm thinking, maybe this is just a step up to trap traders, meaning that reversal pattern is only going to be overrun in the next couple of sessions, and then all those stops are going to be the fuel for price to move much, much higher, meaning going north on EU. It's just a scenario. It's not, in any case, I'm not predicting.
It would be the typical risk-on scenario, no? And we've seen that so many times, especially now in the last years. It's becoming more and more frequent, in my opinion, at least, that we see the switch between risk-off and risk-on, like really within, basically a blink of an eye. Which are like, if you would have asked me 20 years ago, stuff like this always needed times, days and weeks sometimes to develop. So you would see a slow shift from risk on to risk off. Nowadays, we see that sometimes 2 times a day, I have a feeling. And it's very hard, as somebody who wants to day trade, who wants to scalp. This really can bring you on the edge and make things difficult for you, because you need to be able to also switch your opinion like this. And I think traders that start nowadays are more likely to be able to do that because they are used to this environment. For me personally, it's something really that I had a hard time adjusting to, because I started when things were still moving a little bit slower, a lot slower, actually. If you look at like in the year 2000, 2001, how euro dollar would be moving, you probably would say like, why should you trade something like this?
I'm gonna take a nap and come back.
Yeah, really. But it's like from your experience, this is one question that I would like to ask you. This something like this outside bar on a higher time frame within an existing predominant structure. Is that something you see frequently, or is that really like an exception?
No, it does happen. It does happen from time to time. It's not that rare, because I think the market, if everything were all the time crystal clear, then it would be much, much easier. But I think that's where the inefficiencies of the market are created. It's by the market showing us things. It's like a game. Don't we get that feeling? I mean, many traders will relate to this. We get the feeling that the market tricked us into thinking one thing, and then it does the another thing, the opposite. right? It doesn't do that all the time. And that's how the market creates inefficiency. And I think this is just another example of the same thing. It gives you a signal, and it's up to you to figure out if that's a real signal or a fake one. And it gives you all those signals all the time. The market is trying to trick us all the time. And it's just a matter of, experience and holding to your conviction, which should be based on price action or at least data, and not be waved by those opposing signals. But you should still listen to them. You shouldn't ignore them completely.
They still have like volatility. A quick update from my side here on euro dollar, and sorry, not euro dollar, gold. I mean, of course. So we are now really seeing this breakout structure happening. We made a new higher high, which kind of backs my theory that we're kind of seeing a change in the sentiment, that we could see a local bullish structure now again. So what I'm going to do now is I'm going to move my stop loss a little bit higher, so probably somewhere to 68.5. So we have then $1 already risk-free per traded contract in the bank, so to say. So this is for sure going to be already a position now that is not going to lose us money anymore. Sorry for interrupting you there.
No problem, man. No, we like those updates, Dirk. We like those updates very much. So as I was saying, the market is trying to trick us all the time, and that's the feeling that I got, because we feel that all the time, right? Why did I enter this? Why did I think it's going to go long?
Yeah.
Somehow we convince ourselves, or the market allows you to convince yourself that it's giving you signs that it's going to go long. But it doesn't, and it breaks down and goes the other way. It happens all the time, and I think that's how the market moves, right? It's the idea of trapped traders. We have trapped traders all the time, and that's exactly how our price moves from one level to the other one. It's by making traders think one way, and then it goes through whatever level to their stops and shoots the other way. And
and in a way, you also need those trap traders, I think, because otherwise you wouldn't be able to see like really volatile big moves to the upside or downside. This happens because liquidity needs to find an exit or needs to enter to hedge other positions, whatever is the reason, like this cascade of demand or supply we are seeing then coming in at once suddenly.
Yes, indeed. So the thing is then, how do I incorporate that into my daily planning or my workflow? What do I do with that information? That's always tricky. One thing is, and that's to me the reason why we need to be rule-based, right? It's not about emotion. It's not about if you have a rule-based system, and the stricter it is, the more objective it is, the better. Whatever signal comes out is only relevant if your rule says it is relevant. And then you take out that opinion, our opinion, because depending on with what food you woke up today, you're gonna have perhaps a different opinion than yesterday. And that's not how we should be trading. We shouldn't be dependent on opinions. We should be basing it on actual data, on price action, on something, on evidence that is hard, not just opinions that change with the day. So what do I do here is I still have the reversal pattern hasn't been invalidated, so I have no reason to throw it out. If price comes into these order blocks on the lower, not on the lower, but on the daily time frame, that is, I'm still going to act upon my trade plan. So if it comes in here and it gives me the signs that I need to see, I'm going to trade it as if I didn't see this weekly order block, this outside bar. I'm going to trade it up to this TP or something closer. If the bearishness order flow is building its case, but just one sign isn't enough for me to change the plan, because that's what my trade plan tells me. So I'm going to be going long against that new sign because I have enough information. However, I am going to use this new sign or this new indication of the market where sellers are coming in because my trade plan tells me if I see an outside bar, I need to look for, if I see this outside bar happening, it is fresh, it just, as fresh as it gets, as it was created on Friday, I want to look for positions to go short there, right? So I would have opposing scenarios for EU and trade both of them, just not at the same place, right? So I'm going to go long from demand area and short from supply, which makes complete sense. And I would, in this case, I would go to the lower time frames, to the daily, and look for that quasi. Let's see. We do have a quasi on this time frame. Having difficulty with this, but I'm going to be looking only at this structure, nothing from the left, because from the left it tells me that it's reversing to north. It's in this structure, this complex of price action, and I can spot then the break of structure, the neckline on that reversal. So it is a bearish reversal within a bullish reversal, right? It it is kind of, you would say, let me check this. So it is kind of confusing perhaps, but that's how it is, right? The market can be on a different time frame, can be bearish, be the dominating side, while bullish on the bigger time frame. It happens all the time, right? It fluctuates between the time frame in being bullish or bearish. It happens all the time. So you need to be flexible and fluid with it in order to navigate and in order to navigate and be able to capture both sides. And that's exactly what I do. So I recognize that there is a reversal happening, a bearish reversal within a much bigger bullish reversal, and I'm gonna trade it just like I trade all the time, which is we have this quasi, right? And it's about being flexible with your bias, not marrying. Because we have that bullish reversal pattern, I'm going to be going long all the time in every case. No, I might have being flexible means that recognizing when there might be a move to the downside, and perhaps on another time frame I could be taking that this trade, meaning, let me indicate it, this move, right? That lag where, and so it in theory I could be getting a signal to go short while I'm waiting for my signal for price to come to that entry order block on the daily to go long. That would be the ideal. It doesn't happen very often, but that would be the ideal scenario where I get on both sides signals for the market. So if I see this on the daily, I look for that quasi. We don't have an entry order block, so I don't have a reason. I don't have that alignment, at least not yet. I'm gonna be waiting for it, but we are very close. We are already. Let's look at this a little tighter from this move.
Sorry, Victor, if I interrupt you again. I just quickly want to, because there's price action at the moment going on in gold.
Go ahead.
Legitimate question here: what's the targeted take profit on gold? Actually, when I just offed my camera, I was quickly looking at that. So what I'm looking for in a scenario like this usually is to kind of get an idea where could my price target for this would be. So the typical would be to look at an overextension of the last Fibonacci retracement from the last major move we saw here, which would be somewhere around 2875, 2876. So you could put a take profit there. If we in the next couple of minutes are going to reach that price, I'm definitely going to manually close the position there. Another tactic I would choose here to get out of this position, if I would get something like this here, either from my market equilibrium indicator or from my so-called G-force indicator, signals that we are becoming toppish. We are kind of getting this here already, because you can see this with a red background. Doesn't mean that the market exactly has to stop here, but that also would be an indication for me, okay, it's time to slowly get out of this position. And you can do that then either by adjusting your stop loss. If you have a feeling, the market's still going to continue. It's going to overextend over 2875, 2876, or you just take the profit. I probably would prefer the latter. I wouldn't enter short positions on top or sell signals here at the moment, because the structure we are seeing here right now, in my opinion, is more bullish than bearish. So I wouldn't get married to always having to trade just because an indicator says X or Y. Should we see something, should I close for position, I'm going to rudely interrupt Victor, of course, again. Sorry, mate.
No problem at all. No problem at all. That's exactly what we want. We want to be informed of all your movements of your trade, how it is going. Actually, I'm looking at gold, and gold is in 3 minutes is going to close as an outside bar, a bullish one. On the 4-hour order, on the 4-hour time frame, meaning that confirms the bullishness in the market. There's that V-shaped reaction correction that you just mentioned, and it hasn't been printed yet, but by all possibility, in 2 minutes, it's not gonna. It most likely
has to drop by like $4, no, to invalidate that.
Yeah, I don't think that's gonna happen. So I think we can confidently put on this order block there. So I like this a lot. There's how's the ATR on gold?
Quickly, if you, I know we've talked a lot about this in the past again, but we always have new people obviously joining us here. Can you quickly explain what an outside bar is to our new viewers?
Yes, indeed I can. I'll gladly do so. Let's see. An outside bar. An outside bar is the following. Let me get. It's the following. It's a 2 candlestick pattern or combination where the second bar, we have 2 bars, so I'll indicate this is bar number 1, and this is bar number 2. Okay, let me make that bigger. And it's a very useful, I use that all the time, and what it indicates is trapped traders. First of all, it indicates who to control. But not only that, it tells you that traders have been trapped, and it's that makes it a very good trade. And if you like engulfings, you're gonna love outside bars because they're even more powerful. So what are they? This is bar number 1, as I said, that red candle, and the next one, that's bar number 2, and this is the range of bar number 1. Let me make that a little bit more visible for everyone. Right, so that's the range, that's the high, and this is the low. And for an outside bar, what you need is bar number 2 needs to take out or go lower than the low of the previous bar, and go higher, go higher than the range of the bar number 1, right? It needs to go higher. Bar number 2 needs to go higher than the high of the bar number 1, and it needs to close outside of that range of bar number 1. If it does that, that's an outside bar. That's the definition. If it closes above, it's in bullish outside bar, of course, and if it closes below, it's a bearish one. Very, very simple, but very powerful. What it tells you is that, because what happens is, and I'll tell a little bit for everyone who might be wondering, why is it powerful? How does it work? I'm not going to go all into detail and explaining everything, but just imagine this. At every range of every period, and that can be a minute, that can be an hour, a day, week, month, it doesn't matter. When you have a range, automatically, when that range is broken in a following bar, right? This is the range of this bar, meaning once it gets broken, you will find breakout traders that will have their limit orders there, their pending order there, to get into the trade. Actually, it's not a limit order, that's a stop order, to get into the trade, to go short, because the range has been broken. They want to get on board on that move to the downside. And the same thing as we have just talked about, where traders get trapped all the time in the market. This is a perfect example of that. traders, everyone who participated in this wick, you see that little wick there, right? As it took out the low of the previous bar, they thought that the market was going to go much lower, and they shorted it. And as soon as the market came back into the range, they start doubting. And by the time it gets to the other side, they're quite sure that they are on the wrong side of the market, and they want to close their position. And that's what creates these order blocks, these outside bars. So it's trap traders getting out of their positions, and the market, tricking traders into thinking one thing and doing the other thing. It's a very powerful, and I highly recommend people start looking at them and see if they can, incorporate it in their strategy. And actually, before you don't take my word for it, before you incorporate it, test it. Make sure, test what happens after outside bars. Not always, of course, but more often than not. Do they tell you something? Do they, tell you? Are they good predictors of what's really going to happen? Are they telling you what is the market trying to achieve? And the answer is, well, you'll have to find out for yourself. But I know the answer, and the answer is that outside bars are very, very useful. So that's in a nutshell. That's the outside bar. And in the meantime, H4 has closed. 3 minutes, 2 minutes and a half passed, and we have, that means that the market, to me, that means that the market has confirmed that it wants to go higher, right? At least that the buyers are in control. That's what it actually means. Whether it's going to go much higher depends on, let me see, on the daily time frame, not on the daily, the ATR. Let's look at the low of today is let's see if I can see the low of the day. It's at 50. Yeah, that's going to be this low. That's the low of the day. And we're going to use the outside bar, not the outside bar, the ATR. This is the low of the day, 58.66, and the ATR currently is about $41. That means that if the market were to have an average day, because the ATR is an average, we can expect price to move 41 roughly. It can go more, it can go less. 41, that means that we can expect price to go to 22,899 more or less. That's on one side. Based on that, roughly there, that's on the ATR. And the ATR doesn't tell you which direction price is going to go, right? It doesn't tell you that. It just tells you the range to the upside, or it can be, going lower. So we have to measure what that would be. The high of today, let me check. The high of today is at 76, which is exactly that. That's the low of today, the high of today so far. So I'm going to 41, which is around here, 28.35. So if you, and this is the power of ATR. I've talked about this very often. We know, and this is so powerful. There's so much edge in ATR. I know it sounds, weird because it's just a range. I mean, what can be the edge in here? The ATR tells you, it doesn't tell you which direction it's going to go, right? But it tells you that the market, on average, has a very high likelihood of reaching, not ending, not the close, but reaching at some moment during during this day. So it actually tells you the extent it can move on average, and within the next the next 12 hours or so. So it tells you, that's very useful information. If you know in advance where the market is going to go in the next 12 hours, wouldn't that be a huge advantage? Ask yourself that. If you know in advance where the market is going to go in the next 12 hours with a high probability, Of course, that would be a huge edge, and that's exactly what the ATR tells you. However, it doesn't tell you which direction, so it actually tells you two levels. Either if it goes to the upside, it's going to be this one, and if it goes to the downside, it's going to be the lower one. Now, and you can tell me, well, that if it doesn't tell me the direction, how do I know if I go long or short? No, it doesn't tell you to do the direction, so it doesn't tell you which direction to take. However, if you combine it with something that does tell you the direction, you got a golden combination right there, which is exactly what I am seeing here. I'm showing on the chart. We have the outside bar on the H4 price action telling us that the buyers are in control. What does that tell us? Just simply, what are the chances that the market will put a high, that the expansion of the range is going to be to the upside, to the upside, in comparison to the downside. Of course, the chances of the high being put in, the range, the expansion of the range is going to be to the upside is more than 50%, based on this H4 or the outside buy that we just saw here. So if you combine price action with ATR, combining them, so now we know that the price is likely to reach this one. This one becomes more than 50% chance. I know it's very vague, 50%. Why 50? Well, you only have two directions, right? So it's basically 50-50. I know that's a horrible way of indicating it. Let me just type it in. So based on the ATR, you have have a 50% chance, right? Based on because you only have two options, are they gonna be into the upside or to the downside? So you don't know which it is based on the ATR. But when you combine it with price action, you say this one is more likely. So it's going to be more than 50%. That's a huge advantage, knowing the direction and knowing how far it's likely to go during the next 12 hours. That's something you can use for. I'm going to leave those ATR, and perhaps tomorrow we can look at these levels and seeing how price did or did not reach them. And the other thing I need to say about ATR, that the ATR moves is something dynamic. So during the day, you need to adjust them, right? So it's not something that is fixed. But the fact that it's going to reach one of them is that's a high probability event. I love ATR. To me, that's the best indicator in the world. All right. So coming back to, I was talking about EU. Let's go back to EU to see if I finish what I wanted to tell. So I'm looking. If I look on the daily time frame, I have opposing structures, right? So we have a bearish quasi in progress. I'm looking for that short, and we have a bigger bullish structure in progress. Bullish reversal is meaning that I'm looking for the long here, and I'm looking for the short there. Both of them equally valid. And for the when I zoom, that's on the daily and the weekly. If I zoom in, I see on the bearish structures a possibility on the H4 combined with H1 and H2, two areas of interest, and I wait for price to get there for me to look for that reversal on the lower time frame. And we also had a reversal on the H4, a fresh order block that was created just now, and that order block could, in principle, in theory, be be retested. And if it does so, I would be trading along from that level. However, it seems if we look to the lower time frame that the market has no intention, that the buyers are completely in control, and it looks that it's going to go much higher before it comes retesting this. This is going to be something, if it comes back, it's going to be something for much later. By the time, perhaps I'm not interested anymore in that area, because that area isn't interesting or attractive to trade forever. It has a time limit to it. So that's basically my EU position. And we asked people in the audience to let me know what they want me to trade. So let's go check what they chose. You still, if you want me to trade a specific pair, you still have the chance. Put it in the chat, and we will see which one has the most most votes, and I will choose that. We have someone from Russia as well, who saying hi. I say hi to all the traders from Russia and from actually everyone who's watching. Welcome, and I thank you for watching. We appreciate your views, and makes me happy. Makes me happy when we get people joining on.
And guys, please leave a like, not only subscribe to the channel, leave a like here on the live stream. That's the only way really, YouTube, the YouTube algorithm notices us and drives more viewers to that. That's like the biggest thing you can do that, to support us in what we are doing here. So thank you for that. And please don't leave the political comments outside the chat, please. And yeah, I need to recapture the stream quickly again. So we are seeing here now, we're clearly that gold is on its way. So the structure that we've been banking on was the one going up here. We saw a return to the moving average, the 50, the 21 moving average. As I explained earlier, this is very often an established trend where you see like a zone of reload, probably Jonathan would say now, of support until then price continues higher. Price is continuing higher. By the looks of it, it looks a bit like it wants to go really all the way up to the zone I drew here earlier around 2875, 76. Once that is reached, sorry, I could very well imagine that we are going down again here to retest maybe the level of 70. So what I want to do now is, because I'm only going to be on the stream for another 15 minutes, I want to live close this position now, since I live open it already. Also, if you traded this one also, you can, adapt your stop loss, of course, if you believe it's still going higher. But since I opened it in the stream, I want to close it as well. Now I just need to find my fiver thingy here again. Here we go. So I'm going to close it now, market. And we banked a nice profit here of $73.80. Account up now by $395. As I said earlier, I had a losing trade, minus $28, now plus $74 roundabout. So positive for the day, positive for this live stream. This is how we like it, obviously. And I hope you gain some insight this is my personal approach, of course. Somebody else obviously could have seen something completely different in the markets than I have seen. But just to really quickly recapture, what did I do if you didn't watch like from the very beginning? Why did I enter this trade? What was my reasoning, so to say, for it? It all boiled down to, and this is always, as Victor also just showed you, based on an opinion. Are we currently in a more bullish structure? So are the bulls in charge of a market, or are the bears in charge of a market? Now, Victor came to this conclusion, for example, on euro dollar, that probably the bulls are a little bit more in charge, if I understood you correctly, because of the bullish outside bar we were seeing. And I came to kind of the same conclusion this morning when I looked at a lower time frame for gold. I said, well, this looks more bullish for me. We saw after a series of short signals here, so I'm talking about these here, where I was stopped out earlier this morning, that the market reversed exactly at the 200 EMA. Now I'm working with indicators here. You can do the same with price action. It's all what we are looking here, price being displayed in just different things. And what, from my experience, we often see then is that once the markets start rising again, that you are going to see a reload zone here, a floating support, I want to call it, between the 50 EMA and 21 EMA. This is where I entered the long position in gold. Once we reached the high here, the earlier high, so this level here, I said, okay, now it's make it or break it. Either, this gets confirmed or we are continuing higher, probably until 2875, something like this. So I put
I'm
my
not
stop.
sure. Sorry, Dirk. I'm not
Yes.
sure we are seeing your chart, the one you're showing.
Oh, you're right. I am so sorry, because I have two charts open. Like I have the desktop version open of TradingView on my right screen here, and the one I'm presenting on. So sorry. So this must
No
be
problem.
then this one here, probably. Yeah, this is the correct one. Yes. Now you can see my crude drawings. So, like I said, once we broke out over this former high here, I don't want to say pretty sure, but the likelihood increased that we are going to extend all the way up here to 75. We saw again a retest here of a former high, which was a nice confluence with the 21 EMA. This is what basically confirmed to me that my initial analysis of what might be happening during this live stream was right. And yeah, this is basically what I'm looking for. As I said in the beginning, it was not the prime setup I would be looking for. This is why I also just traded 0.1 lots in gold. I didn't risk more on this trade. But for the sake of it, I think it pretty much sums up what am I looking for in terms of setups when it comes to scalping. And on the danger that I repeat myself, of course, scalping gold is also new for me. So I'm learning here on the fly as well.
Awesome. But a trade is
A trade is a
profit
trade.
a trade is a trade, and profit is banked. I mean, what else can you ask for? All right,
Exactly.
so we have. Go ahead.
Please go. No. All good.
We have, let me see, we have a couple of someone asking about what a quasi is. I can surely talk about that in a little while. And before we do so, I saw we have a couple of people mentioning a few pairs they would like me to trade. This is GJ, if I understood correctly, the pound yen, that is the Aussie yen. We have someone asking for Aussie yen, the other one asking for euro dollar. That's one of my favorites. We have, I think I saw another one, where was it? Let's see if yes, we have pound as well, and CAD yen, Kiwi yen, and dollar CAD. Now, you guys have given me basically one vote on each pair. So it's either we need more votes in, or I'm going to choose one of those. So it's up to you.
It's free for you to choose. Yeah.
Indeed, I have the choice because it's a tie. It's a tie between all these pairs. So what I could do is, and this may be actually a very good exercise, I'm going to scan them live in front of you and show you why I find one or the other more attractive to trade. Right. So let's on that note, let's do that. So, but before we do so, Dirk, so you were in one trade, right? On one gold trade?
Yes, I was in one gold trade, which we opened and closed now live here in this session, yes.
Awesome.
Other than that, I had some crypto trades this morning, or one crypto trade. I went long in Cardano, but that one was closed. And of course, I want to focus here on, the task the audience gave me a couple of weeks ago, and that is to trade gold.
Ah, you're taking it seriously.
I am, of course.
Yes, I see that. We appreciate your seriousness. Before we continue and I go check and select which pair makes sense to me on a price action basis, let me ask you a few questions, because we only have you for about 10 minutes more, Dirk. Actually, everyone who's in the audience, if you still want to ask Dirk a question, right, you only have about 10 minutes to tap into his mind, his wonderful mind, that is filled with crypto and trading knowledge. So you still have 10 minutes. Use the chat, use this opportunity, and while you're chatting, while you're typing, hit the like button. Don't forget, hit the like button right there when you're writing those questions as well. Dirk, so we talked about this before, right? That tweet from Trump. Of course, it's very bullish, right? There is someone in charge, the most powerful man basically in the world, wanting something. According to the rules, it's not for him to decide, right? It's the treasury, it's the, whoever government. It's not directly his call, but obviously indirectly he'll have a lot of influence by naming people who can make that choice, right? That decision, and so indirectly he can still make it happen. Do you think that this tweet and this presidential decree, I think executive order, I think it was it an executive order?
Yeah, I think he called it an executive order, but like you said,
Okay.
he was already corrected once again from people who know more about law than he seems to know, that this cannot be done by an executive order. He has to involve a capital for that. Yeah.
Yeah. Do you think that traders, and especially investors who are holding their crypto for longer term, who's not trading for 1 day a week or even a month, but they're holding it for months and even years, is this the green light we've been waiting for, or
No,
not yet?
no, because I mean, it is going to come to this sooner or later, but I don't think it's going to be this cycle, because implementing adding crypto to a reserve in any country, this is something that is done slowly. You cannot just decide this and say like, hey, tomorrow we're going to add Bitcoin to our reserve. The jurisdictional process of doing so, it's much more complicated than you and me, or by the matter of fact, also a company deciding, hey, we want to add crypto to our balance sheet or our personal portfolio. And he's going to face a lot of roadblocks in doing so. We have a saying in Germany, if I directly translate it, it says political markets have short legs. That means basically that if a political decision, like a vote, or in this case a tweet of Donald Trump, is influencing the markets, it's forgotten very quickly about again as well. And in a way, we kind of saw this happening already. Also, that we saw maybe some profit taking or some people being stopped out, that jumped onto the market with leverage. And so I am a little bit afraid, if he doesn't continue to tweet about this, if he doesn't show like, yeah, I'm really going to put this in action, I'm going to follow up on this over and over and over again, that the market will kind of go to its daily business again. We all know that, like one day we focus on something, or the general trading audience, market participant, focus on something, say, oh my God, this economic indicator or this statement by Jerome Powell or Donald Trump or whoever was so important for the markets. This is going to drive the markets higher and higher and higher. It's not. I give you an example of that. When the spot ETFs for Bitcoin were approved, prior to that, we saw the market booming. This is where we made an all-time high already in U1. And once it really happened, the market kind of crashed and went into reverse gear again. This is always like buy the rumor, sell the fact. So in this case, it was heavily buying the rumor. Interesting that the market reacted in the way it did. I totally didn't expect that something like this would lead to Bitcoin, for example, bouncing from $79,000 to $95,000 immediately again. That is crazy. But
It is.
just solely on this tweet, I wouldn't count on this trend continuing. I'm still bullish for cryptocurrencies, a little bit more cautious than I still was a couple of months ago, because we are approaching this natural end cycle, or end of the cycle, somewhere between late April and late October of this year. But so I would be cautious. This could be a narrative, of course, that makes the markets go into this frenzy mode, but only if there's action or more tweets or something coming up from Trump. And the way I see Trump, I always have a feeling, is he kind of tweets what benefits him at this moment. This is why I kind of shared a conspiracy theory in the beginning, half jokingly, where I said, like, I don't know which one of his buddies told him, hey, can you like make a positive tweet about Cardano and Ripple and what was it, Ethereum, because I'm holding back, and when it pumps, I'm going to share my profit with you. Not saying, of course, that this happened, but this was kind of the same, the first thought that came to my head. So I wouldn't, if you are like new to crypto, I wouldn't base my engagement in going long in crypto and buying crypto solely on the hopes that within a month, 2 or 3 or even half year, we're going to see a reserve in Bitcoin, a Federal Reserve in crypto in the USA. And this is for crypto. It's a different story for Bitcoin. Like, Bitcoin is not crypto for me. Like, surprisingly, Peter Schiff even tweeted, I see the appeal of Bitcoin as a national reserve because it's digital gold, which is something you never would have thought Peter Schiff would be tweeting. It's Bitcoin only. I'm very sure if we look in 4 years into the future and we kind of zoom back how our price is today compared to how they are in 4 years, we are going to see Bitcoin much higher. We're going to see the average altcoin, including something like Ethereum, Cardano, Solana, maybe just at the same prices or even lower.
Really?
Yeah.
Yeah, but there's that. You in the crypto space, we read this with some frequency, with increasing frequency, that this time the connect between Bitcoin and the altcoins is going to be different.
Yes.
It's going not going to be the same. And that's exactly what you're saying, where Bitcoin is continuing its path, while altcoin probably is going to be lagging, if not going the opposite direction, going lower.
We haven't seen that altcoin season really. No? I mean, you could argue, of course, the altcoin season was now those 50% moves we've seen now within 48 hours in some altcoins, but this is not an altcoin season, of course. On the contrary, we see Bitcoin dominance going up, up, and up, which is a sign that within a risk-on markets, which cryptocurrencies are, Bitcoin is kind of the safe asset. Because why? What gives Bitcoin value? Well, as I said before many times, the decentralized network. And this is something no other altcoin has. We saw that on Solana, for example. I mean, I like Solana as a project because it makes smart contract programming cheap and easy. But you had something like I don't know if it's a CEO or one of the head developers of Solana tweeting something which immediately drove down the price by like 20, 30%. And this should not be. This is like totally contrary to the idea of cryptocurrencies, of decentralization, that one person can have such a huge impact. This is why Bitcoin is the only cryptocurrency for me. Decentralized. There's no shining figure. Thankfully, Satoshi Nakamoto, whoever or whatever that group was, or if it was a single person or group, we don't know, that is still unknown. This is one of the appeal, because you don't have a shiny figure, except maybe Michael Saylor. You could argue that, of course, but spearheading, no sort of guru.
Who's Michael Saylor, for those who don't know him?
Michael Saylor is the CEO of MicroStrategy. MicroStrategy is a software company who has become famous for... Michael Saylor himself has become famous from being totally anti-Bitcoin to being probably the most pro-Bitcoin person in corporate world. So MicroStrategy is buying up Bitcoins. They have Bitcoin funds. They are giving out loans to buy Bitcoin and so on and so forth. So there's probably nobody else more bullish in this world than Michael Saylor. And by the way, MicroStrategy is also one of the largest holders of Bitcoin right now.
Awesome, Dirk. Thank you for all your insights.
Yeah.
Always very, very interesting. I love sharing your time with you, Dirk.
Yeah, thank you. I love your insights also on price action. Always a lot for me to learn as well. All right, guys. Yeah, thanks for having me again. I'm going to leave the stage now and hand over to Victor. And I think we have Mike coming on right now as well. And yeah, see you guys again latest next week, Monday. If I see another gold trade, I might pop in later, of course, again as well.
Perfect.
Take care, everybody. Bye-bye.
We'll be patiently waiting for your return, Dirk. Take care.
Bye-bye.
Yes, and people in the audience, they show their love for Dirk as well, and their appreciation for his knowledge and everything he shares with us. I think it's awesome to have people like Dirk coming in and telling us, these they're not inside information, but they're very valuable information that you may or may not have at the moment. So we're looking at euro dollar on my chart, but of course we had I had a chance to let's choose live on what trade we're going to be taking and do the the live trading. Look for I can't promise I'm going to take a trade, but I will try my best to do. I probably will be able to catch something. Let's see, we have CAD Yen, so let's look for that. We'll put it on the screen. CAD Yen. Right. So let's put it right there. I'm gonna, put it on the list. I'll put them. Let's put them below here. Right. So I'm gonna take out the this one and this one as well. So CAD Yen is one of the first pair that we got. Then Kiwi Yen. The other ones were dollar CAD. I think we already have that one. That's this one. There we go. Perfect. Hit the like buttons, guys, if you like our content, if you like the knowledge, the experience, the tips that we share. If you enjoy spending time watching this stream, you think it is helping you advance your and improve your trading skills, don't forget to hit that like button and letting us know and the algorithms that this is something you prefer to see more often. All right, so we already have pound dollar. What else? Mike is in the house. Welcome, Mike.
Hello, Victor. How you doing, my friend? You all right?
I'm doing fine. You have such a nice radio voice, Mike. Has anyone told you that?
I've got a face for radio. That's what they tell me, Victor. I've got a face for radio, not a voice, a face for radio.
Nice. Let's see. Let's see, the Aussie, we don't have it in the list, so I'm gonna add it as well. And the people in the audience, just to bring you up to speed, Mike, people in the audience, they named a few pairs for me to trade. Of course, I asked them. I'm gonna trade live one of these pairs and scan them to see if we can find anything. I think we got them covered. GJ is the last one. All right.
Hey guys, good to see you. Hey Robert, Haresh, Samir, Nomad, William, Venetius, good to see you guys. Hope you're all doing well. I see Mixie's in some gold. Who else is trading gold? I'm looking at gold at the moment, and I'm a little bit annoyed. Well, I'm not annoyed actually, because I'm pleased for him. Alex got a really nice buy on gold this morning, and
really,
yeah. He basically he held on to it, and I closed it because I saw it turning, or I thought I saw it turning, and it didn't. So I don't know if it's going to go all the way to his TP, because he's holding out for something like 2891, I think. So he's got kind of a long hold potentially for that one. But yeah,
nice.
I mean, I took some profits, but I'm looking at it thinking, damn it, I should have left that one open. But alas, I much prefer take my profits than stress about it when I couldn't watch it and keep an eye on it. So yeah.
Nice. does actually I was wondering, does Alex hold his trades? Can he hold his trades longer than a day? Does he usually do that?
I don't think I've ever seen him hold a trade longer than a day.
That was what I was thinking. I don't remember.
I think he likes his adrenaline. You know, he likes his dopamine fix of his trades closing sooner rather than later. So yeah.
He's
I don't think he
on
does.
a lower time frame, of course. Yes.
Yeah, exactly, exactly. So
okay, so
what are you going to be trading, Victor?
I have here the pairs. There are 6 in total. Let's begin with the dollar CAD. I'm gonna do a quick scan. Right, there are 6, so I can't spend half an hour on each one of them. Analyzing quickly what I see. I'm just going to see if I see something on the last couple of bars in terms of price action, and if I see anything bigger that really pops out. I don't see anything here, so let me go to the 4-hour. Do I have something? There is a quasi there, which I have apparently previously indicated, and we have a outside bar. Not an outside bar. Actually, it is an outside bar that was created. I didn't spot this before, right there, and that's a reason, right? It's of course under the highly time frame. It's kind of it seems irrelevant for our trade if we're going to take a trade for today. But I have a reason here to expect price going much lower. So I like dollar CAD. However, if I'm going to trade it in the next, few hours, take a trade today, I need to find a spot where it makes sense for me to enter. And the spot is, of course, here, but we're not there yet. So this is something promising, but I'm probably not going to be able to trade anything from it. And it seems like it made its move. And yes, I expect it to go much lower later. But to me, it needs to come back and, find a supply zone. And I don't see anything on the hourlies. And if I go to a lower time frame, we could. I don't like. I don't. If I'm honest, I don't like this for going short. I don't like that pin bar. That's a very bullish looking pin bar. So it looks like the market is probably trying to push higher from here, not necessarily go much higher, but somewhat higher. And I'm not sure how high this is going to be. Is this order block on the H4, is this enough to push price lower? Maybe, but that pin bar is kind of ominous. If I want to going short, I would like it to have a clear area where it's going to revert from. I don't have that yet, right? We have this 50-minute here. That could be something we could use. So will I trade this one? Let me check the ATR as last thing before we continue to the next pair. I like it's only at half its ATR, so it can go both sides easily. That's the dollar CAD, right? So looking at this, I like it on the higher time frame, but I don't think it's at a favorable or advantageous place right now for me to trade. So I'm gonna leave it as it is. It's on the list. There is something, but I'm not sure if I want to trade that. If I'm gonna be using that for the trade. Let's look for pound yen. Pound yen. Perfect. So let's see. Do we see something here? Pound yen. Sure. We are in a bullish. We created. Go ahead. I thought you wanted.
No, I was going to say there's a lot of divergence on it at the moment on the strength meter. A lot of strength showing on the pound against the yen. Yeah.
Oh, I see. I see it makes sense on the currency meter because I see there's an explosion. You can see how these these candles, they have been rejecting going higher, right? Each time it goes higher, it seems to be price seems to be rejecting it, and we seem to have broken out of that range. And even you can see at the higher highs each day, meaning that the buyers are pushing it harder, but still being retraced on the rest at the end of the day. But that seemed to have been broken, and we created that order block today. We retested it. So if I want to go trade this, I want to be long because that's the side that is in control. There is, however, this order block, but hey, that's not necessarily something I want to trade because it's not fresh anymore. And looking at the ATR, we're way past the ATR. Okay, so this looks interesting for a mean reversion trade. The ATR is currently at 190.56. So that is around here. That's the ATR. This is just the daily. So that means that we could be looking for a short here, but it's too early. It hasn't even reached that daily order block. It hasn't created an H4. So before I can go to the minutes, I need the basis for my trade. But this is extended. It's a little bit extended. It's about 130% its ATR. But it doesn't surprise me because that's the compression that we've been seeing the last couple of days, and now is the expansion. It's sort of like in physics where you have coiled up energy that suddenly is released. So this can go on for a little bit. So that mean reversion trade, if I'm going to be taking it, it'll probably have to wait for the end of the day. So that makes it not very interesting for our stream to be taking that. And you can still see that the buyers are on the lower time of the 15-minute. The buyers are completely in control. There isn't one bar in the last the last 3 hours, right? 3 hours. One bearish bar on the 15-minute. What does that tell you? That tells me that it's not ready for a mean reversion yet at all. That's going to be basically a suicide to go short on this, unless you see something on the price action. It doesn't make sense, right? It's a it's not a great short to go in, to take, and a long. Well, it's extended. If it's extended, going long, is probably not the best thing to do, because the further it extends, the less likely it is to continue, because then the more it is stretched, and the more that's the idea, right? The more it wants to come back to some kind of mean. All right, so I'm gonna take a GJ off from those options because of what I just said. So I'm not gonna be even looking at GJ. Let's look at the Aussie Yen. What do I see on the higher time frames? Okay, so we have nothing really interesting on the 4-hour. We're coming into some kind of supply zone. That's interesting. Maybe I can take a trade from that. That's a very beautiful reaction from that supply zone, from that order block. That's something interesting. Let me check the ATR on Aussie Yen. The ATR has still about 20 pips to go north, 28 to be exact. So it still can go a little bit higher. The ATR tells me it can go to 28, meaning that means 24 more or less here. Based on the ATR, this is the measured move for Aussie Yen today. But does that help us take a trade? On the lower time frames, I would want to short that interaction with that lower order block, that lower border of that order block. But if I take that, that's going to be a very short trade, a scalp, if you will, only a few minutes, because it's very bullish, and there's nothing here I can use to know how far down it's going to go, if it goes down. And right now it seems to be. Let's see if I can find something on EJ. There is I will have to wait for a Quasi to be forming, something like this, right? Something like that, before I can take it. So I don't think it's matured yet, but this is interesting. I like this, right? If I can get a short from this area, it makes sense to me. Let me mark this. This was on the 50-minute. Let me mark this order block as a 50-minute order block. Seems to be very strong, bullish. It means it probably is not going to reverse from that area yet, but we'll have to see. We can definitely look this, take a look at this as it progresses, right? And the reason is that we might see a reversal after the market, depending on how the trade, depending on how price behave after breaking that lower border of that daily time frame. Looks very bullish. Not exactly something I want to trade right away, but it could potentially form a bearish reversal pattern, which then will make it possible for me to trade. All right, let's look at Kiwi Yen. Kiwi Yen, what else do we have? All right, Kiwi Yen on the higher time frames. I don't have anything either. Same thing with all the yen pairs. They're going higher, meaning yen is getting weaker. And these pair are, of course, that's why they're moving. Lately, yen pair have been moving quite nicely. You got some pairs, Michael, right? Some trades I think last week, wasn't it, on yen pairs?
Yeah. When I've seen it showing extreme weakness or extreme strength on the strength scores, it's been a really good asset to keep an eye on. The problem with the yen is that it is very, very volatile. It tends to wick a lot, so you do have to kind of really be conscious of that in the back of your mind, because it can catch you out quite easily. So yeah, but no, there's definitely some good trades. Interestingly enough, you're saying about the pound yen. Just looking generally, the pound is just looking very, very strong today overall. And that seems to be off the back of the S&P Global Manufacturing PMI that came out, which was higher than expected. So over 0.5% or 0.5% more. So 0.5 higher than expected, and almost 1.6 above the previous month. So manufacturing for the pound looking strong. And generally all the other kind of medium, let's say medium type news on my FX book at least, also showing bullish favor for the pound. So that came out just over 2.5 hours ago, but that seems to have now been really pumped a lot of positivity towards the pound. Obviously, just as we wait for the US to open in a couple of hours.
And was that visible on Forex Factory, that CPI, global CPI, or manufacturing, I mean?
I'll have to double check. Give me a second and I'll tell you.
Where did you know about it?
My FX book.
Okay.
Doesn't look like it was, no.
It wasn't,
No.
right.
So my FX book just tends to be much more sensitive in a way. So it does highlight a lot more news events as high impact or medium impact. But it also means that you're less likely to get caught offside or caught unawares by things, which very often my Forex Factory doesn't necessarily pull out. So obviously it doesn't necessarily impact you if you're on a high stakes account. That's a good thing. You can still trade those events, but I think it's always still very important to be aware of them, because depending on what we're talking about, they can they can still move the markets quite a bit.
Perfect. In the background, in the meantime, I've been checking Kiwi Yen. From the daily time frame, there isn't actually anything that I can, it's bullish. It's not printing. It's showing a bullish order block to be made at the end of the day. We have been a little bit of consolidation the last couple of H4 candles, and we seem to be ready to break out of it and get to the next level, which is this supply area we have above us. Based on the ATR, we can still go another 19 pips. So that tells me that the market still has, with the with the bullishness, with the weakness in yen, we can still see price going to this level. Let me mark this for everyone. We can still see the high of today, right? That wasn't. Let me go to the daily time frame to see it. The high of today is 68, right? Let's go back. 68. That is the high of the day. Let me mark. So 19 pips above that. It's going to take us 19s around here. It makes sense. So it is within reasonable reason to reach that order block today, meaning it's at 86. Let's mark that. That tells me that it makes sense to expect price to not only break this but eventually reach the next order block. It is within the ATR. It is with the direction of the order flow. The only thing is, I might get a. There is, however, a very nice alignment here. We have a 4-hour order block, which is this order block, and we have a 1 hour as well that supports it. It's visible on the 1, on the 2, on the 4. I like that alignment. And on the 15-minute, it also has an area here. So what I would expect is that price will, or is likely to respond to that area. So I could, even though look at that, and it's almost gone. It's either going to respect it, and we're gonna see some bearish price action coming in, or it's going to, because there's going to be stops here because of these structures. You obviously you're gonna have stops on the other side. So it's either going to push. This is the decisive area. It's either gonna push through it and break out, or it's going to have slow down and make those reversal patterns. So what I would want to see is how price action is behaving as it is interacting. From what I see, it's going to break out, right? Because look at that big candle. If that continues, obviously this is going to end up going much higher. So that reversal reaction, it's closing above it on the 1 minute, although that's not very, very significant on the 1 minute. We'll have to revisit that pair in a short while, but it looks, I don't see any trade that I would be taking with that pair long, even though I think it's going to continue to go much higher. I want it to come back to some structure that I can take that long. If it doesn't come back and it just keeps on going, I can trade it long, but it's very difficult to have a tight area or a good risk reward ratio, because how do I, if it's not retesting a demand area, how do you define your risk, right? So that's the direction. Let me look at the last two pairs. CAD Yen, very nice one. So we have bullishness, bullish order flow based on that daily price action. We go to lower time frames. What do we see? We see not a quasi. This is the neckline. Not a quasi, but perhaps, I already see it is a quasi on the lower time frame, but not on the 4. And we see this very nicely, how price comes back to this daily order block and creates those pin bar. That's not a pin bar, but here these are both of them are pin bars and an engulfing as well. So this is clear indication that price was rejecting this order block, and it makes complete sense that it pushes up to the next one, right? This story is very, very technical, very clean. I like when price is doing that. The question is, where would I be entering if I want to be taking this? The price has already left the station, right? By the station, I mean this structure, the initial structure that I would want to go long from. And if that's not the case, the next station is on the next structure is on the H2 and it hasn't come back. So if price would come back to this, that's where I want to be taking the trade. Now it's already more than halfway, reaching its destination to the other side. So, I want to get something that makes sense. I not just trade for just to trade. I want to, show something that makes sense, that I would be taking as well on any other occasion. Not just because I'm trading live to trade live. All right, so I like this a lot, but I don't see an entry.
You're right there, Victor. I think Victor's all right. We'll just we'll give him a second. There we go.
I'm fine. Just have to take those pauses from time to time. All right, so on CAD Yen, it makes a lot of sense, right? The market is going from one level to the next. Mike, I think I'm gonna take a short break. I'm gonna be right back.
Sure, mate. No worries. No worries. Let's go and just share my screen. I am just looking at pound JPY at the moment, to see if we can get any opportunities, because this seems really, really overextended. So just looking to see where can I see price reacting from. And at the moment, if I'm looking at this area here, I could probably see us coming to this one. And I think we already have. We're just tapped into it. You can see here that it's an area that price has tapped into a few times and pushed off from. Now it's pulled back down from. So it has come into that area, but it hasn't necessarily stopped just yet. It's still showing momentum moving forward. So if I pull down to the lower time frames on, say, the 15-minute, then where can I see some kind of reaction zone? Well, there's this one here, this wick, that didn't really do very much. If you highlight that on the 15-minute, it did have this little wick here on the 15-minute. I believe we have tested that, not yet. So we've kind of tapped into it. So what I'd then be looking for is see on the 1 minute, for example, are we seeing maybe any kind of change of direction? Obviously, got to remember that quite often with the pound yen, that we, with any yen pair, in fact, we can end up with a lot of wicks being quite nasty and catching us out. So it's always worth just waiting to see how does it form on the 1 minute. Sometimes with the pound yen or even any of these pairs, they can just react straight away. So for now, at the moment, I wouldn't be looking for anything until I start to see something like this. This would have been an interesting one had it held, but it didn't. So this wick here, it broke through, but it has left a long trail of liquidity behind it. So this one now closing at the moment is still in that area, and could well be an opportunity for some sells on the pound yen. We've been on a very, very long bullish run on the 1 minute. That has to kind of correct itself. It can't just keep going. It's just a question of how far does it want to go on the higher time frames. We are in this, if I isolate this down a bit, we are in this 3 hour engulfing candle wick. So we are in a prime opportunity, in a prime area to try and see some pullback. Whether that's going to happen very quickly, I don't know, because it does look like this momentum is very, very strong. So it's unlikely that's going to happen immediately. Probably what will happen is we'll have a candle closure and then price come down. Because if we were to have price come down immediately straight away within the next, say for example, the next 2 hours on this 4-hour candle, that means we're going to have a massive wick pushing us down, and that suggests that the pound strength actually isn't going to hold, and then it's going to pull back down. If we go out to the 11-hour, we could be actually pushing for taking these areas here. So we have this area in here on the 11-hour that looks like an interesting area to see price react from. We're still coming up to that 200 EMA, so there's still air to take, so to speak. Otherwise, you could expand that zone out to here as well, where we're taking out these inside bars on the 8-hour, the 4-hour, and the 1-hour as well. So at the moment, I think we've broken past that zone that I marked out here. So we're still going further. Again, not really seeing any kind of indication of price stopping. Let's go across to this area here and let's see what we can find. Is there anything in here? Well, there's an argument to be said that there's this area here in there, these wicks here, because they weren't respected, they were taken out. The other area could be coming up all the way up to here, but I just don't. At the moment, I can't see it slowing down. So until it starts to slow down, it starts to see some resistance, then it's going to keep on going for the time being. So I wouldn't be looking necessarily for anything just yet until we start to see some steam running out. At the moment, it doesn't look like it's going to be doing that anytime soon. If we break past these areas, then I think it's safe to say that we'll be pushing further up into the 192 areas. The 192 is obviously a psychological level as well that price will no doubt react from as well potentially. So GU still on its. I mean, look, if you look at that, that's a massive move up, and I'm just trying to see where did we break out from. If I was to look at this from a break and retest perspective, I know how much Alex likes those. Probably something like that. So we've come down to the 50. We've actually reached the 50 level as well. So that would have been a nice trade potentially for Alex on the 15. Would he have taken it on the 5? I'm not so sure. But it certainly looks like it's reached a point, and it is starting to slow down a bit. So we'll see. It's I mean, on the 1 minute that just looks very, very very, very overbought. So we'll see how that one plays out. How you doing, Victor?
I'm doing great. How my throat is doing is the question. No, thank you for everyone who has been giving me advice, and thank you, Michael, for being here, saving.
No worries, man.
Saving me again. So yes, throat permitting, I will continue my my analysis to choosing which pair I'm going to be trading. In the case of the CAD Yen, it is very, I like it when price makes sense to me, and it makes a lot of sense. You can see how nicely it creates this order block, and I like when price does that. That gives me confidence that price is, the traders are looking to the same structures that I recognize, and they are working very nicely. The bullishness that created this order block, you can see how price comes back to them, reacts to it, almost gets there, it penetrates it a little bit, and then shoots up very, very nicely to the next order block. At least that's the expectation. So, but the question is, can I trade this? It's very technical. I like that, but can I trade it? Do I? Where would I be trading? Of course, you want to be taking a trade. You want to be going long from a demand area. but that demand area price has already left it. So I would want, as I said, I think I mentioned this as well. I would have wanted for us to be taking the trade as price is getting out of that order block or demand area before it's almost reaching the other side. So this too, I think the train has already left the station. I could take a long from here, sure, but where do I put my stop? To begin with, where do I put my target? My target, the most conservative, would be close to the lower border of that structure. We could go much higher, but the further down you put it, the riskier it is, because you're actually assuming that it's going to hit your target, hit its daily ATR, which it is likely to hit, but it's doing it without coming back, without any retraces. And this has made quite a respectable move up without much retraces, without any, basically. So it's not a very high probability event, or the probabilities are not that high that it's going to continue and reach, in a almost straight line without retracing back to some lower levels. That brings us to the fact, to the conclusion that where will I be putting my stop? I would have to put it all the way below that move, because it can easily retrace this move without breaking the idea, the bullish case, right? So if that's the case, then I would end up with something like this, right, with a negative risk reward. And you could build a good strategy with negative risk reward ratio, but that's not typically how I want to be taking my trades, right? So I would want it to come back to something that makes sense to me, closer to that demand area, and we take it as it moves away to that area. That's the one that makes sense, but it's not there yet. So I'm going to wait on that one as well. Let's go to GU, the last one in the the last one in the list. Hello, Void, one of our regulars in our stream and on Discord as well. All right, so GU. Perhaps I can find something on GU. Let's look at the ATR. How is GU doing in ATR terms? GU is overextended. It's about, let's see, 30, 40, 43, basically above 150% extension. It's ATR. And that was from some news you mentioned, Mike, right? Some news on global manufacturing.
Yeah, that's right. On the PMI.
Yeah, PMI. All right, so we are getting back to this order block. That makes sense. That if I see this, and I see that the market is overextended, and we're getting into some nice supply zone, obviously what I'm thinking is I want to short this. However, you don't want to short something that still has impulsive move to it, because as long as it's being impulsive, it making impulsive move, it can still continue to go, and it's very difficult to know what the top is, right? That proverbial falling knife, in this case it's a rising knife, if that's a thing. So on the 4 hour, I do see that we have a reversal pattern. This is looking interesting. We have a quasi, right? And that quasi has given us one order block, which we are currently retesting. Now this looks very interesting. All right. Other than that, I don't see anything. So this builds the case for me to be looking for a short, but the timing is a thing. And we are getting into a very interesting area where we also have a H1 order block telling us that this is a great area to go short. I like this now, even though, yes, it is against the momentum, and you need to watch out going against the momentum, because the momentum can continue until it dies down. As long as the momentum is still there, you shouldn't try to go against it. So we have GU at 150% ATR, and it's getting into a demand zone, and that has also alignment on the H4 and H1. I like that a lot. I'm going to confirm that this is an outside bar. The high is, indeed it is, by a pipette, but it's still a great area. So now if I go short on the lower time frames and to look for a short, obviously I don't see it. I don't know about you, but I'm sorry. Sorry about that. I don't know about you, everyone watching this, but I don't see this the reversal yet. It's not there. So we need to be patient. If you want to be going short something that is so strong and powerful as this, you want to be very, very patient. You can't be impatient. And even after seeing some indication, you don't want to be jumping the gun too quickly, because it's not a it's a kind of dangerous to go against it. You have to wait for that confirmation to come in. And I don't see the confirmation yet. Price action needs to confirm to me that this area is going to be, at least for some time, a supply area. Right? It's supposed to be a supply area because of those order blocks. But is it really going to be sold as price gets? It's not being sold right now. So we need to wait for that to happen. This is definitely something I would want to trade, by the way. It is a lower than 50% chance of happening, but because you have so exaggerated move, you can easily compensate this with a tight stop, because your stop doesn't need to be very far if you take a short from here. And that means that even if you have, it has a 30% chance of succeeding, having a high risk reward ratio will compensate for that low win rate, which is exactly what I trade. All right, so let's see if I can find something. I want to see something. I want to see a reversal on this, on the lower time frames, on the 5 minute, for me to do anything. But what I see is the opposite. Bullish outside bars being created on the 5. Instead of getting slower, we're getting acceleration to the upside. So that tells me that maybe there's not going to be a chance. Perhaps it's not going to reverse from that area. It's going to break through, and meaning that possibility or that trade that I'm trying to look for may not present itself. So what are we left with? With a very promising GU trade against the momentum at a area, but it hasn't confirmed anything yet. It hasn't confirmed that it wants to reverse from this area. So, but we can certainly look at it in the coming minutes. And then let's go back to dollar CAD to see if we have anything. $45 minutes for that close. Let me get some other time frame. I like this. I like this dollar CAD Have you taken any trades already, Mike, today?
No, I did. I took the gold this morning. I've taken a couple of small break-even trades on pound JPY. Just waiting to see when we're going to see that reaction down, because we're so overbought at the moment that I'm expecting us to see a reaction. We've just tapped into a zone of interest. It's just a question of whether price wants to take the liquidity levels that I've got marked out on the 8 hour and the 4 hour. So if we look on the 8 hour, we can see that we've got this area of resistance created here, but it's basically decided that that was going to be the move that would ignore this inside bar level of liquidity. We then also have these ones up here. So there's certainly an opportunity for sells to come in. But we're still not quite at the 200 EMA. So I think it's just, like you said earlier, it's a matter of just being patient and waiting for it. At the moment, I tried to trade this one. So I took a sell at this level here with a stop here. And thankfully, I closed at break even. This wick was very, very quick all of a sudden. No particular rhyme or reason for it. Obviously, something in the market triggered something. But at the moment, still waiting for some kind of signal, potentially on the 1 minute right now. That could be one where we've got this wick of this engulfing candle here, but it really needs to be respected. If this high gets taken by this existing open 1 minute candle, then it's an invalid entry. But right now, it could be a decent market order to sell with just a stop just above it to see us push down. So I'll see how this 1 minute candle closes, and I might just take a very quick short sell. Yeah, I'm going to take that one very quickly, and we'll see how it plays out. Should hopefully at least bring us back to this level here and retest this wick. So just taking a short from just about here, stops just above it, and we'll see how far we get. But a nice little 1 minute scalp, I guess, if you want to describe it that way.
All right, so I'm going to let me show my chart. Someone in the audience, and we have Marina with us today as well. Hello, Marina.
Hey, Marina.
Another regular in our Discord server. And someone was asking if we do have a Discord server. Yes, we do. And it's a great one. Indeed, the Discord is available for every trader. So if you have an account with us, go into your hub and you will find the Discord icon. Clicking on it will give you access to our server. Go there. It's an awesome community where you will be able to find like-minded traders and a lot of people who are, ready to be a good companion for your trading journey, just to say the least. All right, so we have Aussie Yen. Someone mentioned this as well. Let me check who it was. There was someone who mentioned that Aussie Yen is in the area that I mentioned. It looks like I predicted that high. Of course, that line was really just thrown on there. It's not as precise as it looks, because I didn't measure it to the pipette precise. But it's a good idea. Once the pairs reach their 100 ATR, even if they continue to go higher during the rest of the day, something changes in terms of price action. Usually you'll find some kind of reaction. The momentum pauses. Even if it continues, it pauses because it's getting into extended territory. On average, doesn't mean it's going to reverse from here necessarily, although a lot of times, because that's the average high, the average range of the pair, it tends to slow down and start its reversal not very often, not very seldom, after reaching these highs. So I'm looking at patiently, though. I'm not jumping the gun yet. If that's anything, it's not enough to me, to be honest. On the 5 minute, it's not, and then the 1 minute, it's not breaking any structures. Right? You got to not impose your ideas on the market. You have to be open and let the market tell you what it wants to do. Right? The market has a ways to speak to us through the creation and invalidation of structures. And at least that's how I see it. That's the story that the market is telling us. And right now, the story is still bullish, right? This is the story. What do we see there? Still bullish. So to me, it's not enough that, yes, it's reaching that area where it could be going lower, but it's not doing it yet. And I'm not going to guess and anticipate something that I don't see yet. So Aussie Yen is a very good a trade where we could see something perhaps maybe in the next couple of hours, something like this. And then when it does have a reversal pattern after it reached that 100% ATR, then it becomes very interesting for perhaps a retracement to some kind of mean. But I don't know if that's happening already. I don't see it. And the other one we're watching is pound dollar, which reached a 50-minute order block based on a Quasi, which is, I do like this, but it's not enough for me. Not on a 1 minute. There's not enough break of structure here. To me, the neckline is still lower. So I would still want to see perhaps a push higher from this, a push a little higher, and then break that low, and then I could be looking for that short. If that were to happen, then yes, I would want to be going short as it comes back to something that makes sense, but not yet. If I really want to take a short here, I could, but it would be very, very speculative on my side, or aggressive, not waiting for break of structure. And this is the 1 minute, so at least you want to see it on the 1 minute if you're going to take a trade. It's not visible there yet, at least not to me. And the dollar CAD has been has changed direction, right? I was looking for a continuation of that bearish structure we saw here, because everything indicates that eventually it's going to end up going lower. At least that's the the price action, the higher time frames. But that's the thing. If you just by having the direction is not enough. You got to have an area where it makes sense for you to enter, and that's in a bearish scenario. That's the supply area, and I didn't find anything on the lower time frame. Nothing convincing here all the way to when it gets to this area, and it hasn't reached it yet. So until then, I'm not going to participate. It looks very very selective on my side, but I think that's the way you should trade. Right? Be selective. Maybe the chance only comes one or a few times a day for you to take a trade that makes sense. And even if it doesn't come along, don't force your trade. So I'm gonna be, I want to be trading. If anything, I want to be going short GU, and perhaps dollar CAD as well, when and if it reaches this area for a possible move down. We'll see if that happens. I'm gonna be on for another 5 minutes, for at least for this session, and afterwards I'll come back in the afternoon, or the last hour of the stream. And if I trade anything in the time that I'm on a break, of course I will show you guys that as well. So what are you looking at right now, Mike?
So right now, that GJ is playing out quite nicely. So I've got two positions. I've got the one here, and I've got another one that I took higher up. When I still think we're going to go long, because I think we've got a perfect equal high at the top here. So I just took two positions, and I'm looking for us to come down and retest this wick down below. And then I think we'll probably be going long again to take this, because this is a weak level for me in terms of how the move started. But looks like it's going to go to TP, which is nice. So yeah, happy with that one. As I say, I got caught out on the break evens a couple of times, but it looks like it'll be a nice trade to take at this level. The reason for this level, obviously we've got this wick, but we've also got this particular candle here started as a wickless candle. So there's no wick further down. So it's just, there's been something happened in the market here that's created a lot of volatility and a bit of an imbalance. So that's why I'm expecting price to just come down and just retest this level and just confirm that that buyers are still happy to continue pushing on up. So should, I mean, we've got this wick at the moment, which has taken this wickless candle and this one here, which is probably why we're seeing this reaction right now. We have already come into the 3 minute and not quite the 2 minute in terms of testing the wick. So I'm hopeful that we'll still come down and retest it. It is a 5 minute engulfing candle. So again, it's looking for price to come back, retest it before it then pushes on further up. As you can see on the 7 minute as well, it's an engulfing candle. So very, very short little scalp, I would say. It's broken past the 21. It's now retesting it as it's broken past it. We'll see how that reacts to it there. And I'm ready at break even anyway. So if it comes against me, then no harm, no foul. But quietly confident that it should go to take profit on that one. Other than that, I'm not looking at anything really. Once I'm in a trade like this, I prefer just to watch that trade and not distract myself with different assets and different currency pairs, etc. Because especially with the Japanese yen, things can change very, very quickly. So it's always preferable just to keep an eye on it. And maybe I could be accused of over managing some trades, but I prefer to keep an eye on them and make sure that they go as planned as much as possible.
Nice. That's that's good to hear. I'll show my screen in the meantime with your permission, Mike. We do have a this is a 15 minute. It's not something I use in my trade plan, but this is, I'm not trading right now. I'm not trading exactly according to the trade plan with the exact rules, but of course I am using the same concepts, right? So this is the 50-minute Quasi, which is within a 1 hour, which is within a 4 hour, and which is also within a daily. So it has, if I take a trade from here, you could hold that for quite some time if we have the market, but it's unlikely, looking at this bar, looking at the momentum, that this is going to be the reversal point. If anything, it's more likely to just be a little retrace before market just continues higher. As you can see as well, the market is making higher lows continuously, right? So the market structure is very bullish, and even though it is interacting with that order block, that very structure, it's not showing signs of a reversal at all. And as you can see, it came back to that 5-minute order block. And you have to follow price action. Just because there is an order block here, right? It means that the sellers will come and defend it, but it doesn't mean it's going to hold. Look at that. Look at that price action. Look at that acceleration. We are, very confidently going up, very even accelerating into those area. So it looks like it wants to continue to go. And if that's the case, we should just let it go, let it move. And trying to see if there's a reason. No, I don't see the the reversal pattern. Not on any time frame. But this area is where I would want to be taking the short. Right? But I don't see anything from the left. So I'm reluctant. In those cases, it's better to sit on your hands and wait for. What I wanted to see was more of a push, because this would be the left shoulder, but it's not. It's not the left shoulder, right? This is the structure. That would be the left shoulder, the head, and the break of structure. However, this left shoulder is a weak one. To me, it's not even a left shoulder, because it didn't give me the price action that I'm supposed to see in a left shoulder. So I would assume that this is just going to break and not hold. So I'm not going to do anything and just wait. Although it's very tempting, but it doesn't make sense to just take on something because you want to take the trade. That's not how you profit in the market, right? It's not what we want. It's what the market is telling us. Let's see on the 5-minute if we can get some. Go ahead, Mike.
No, I was just agreeing with you.
Let me check if we have any. Now, if we were to have, what would happen? What would I need to see? You could ask yourself for me to take the trade. If I were to see on the 5-minute, let's say, a reversal, a rejection candlestick combination, let's say an outside bar, a new one to be created, because we already have one, which is this one. It created the bearish order block. It see this order block. It's very technical, right? See how it goes from one level to the next. This is the creation of the first order block. That's the bullish one. It goes and creates a one in the opposite direction and taps into that freshly demand. So very, according to bullish order flow, it reacted to the upside. Doesn't seem to me it wants to reverse. There is a bearish order block that was created here, as you can see. So, but on this retest, I want to see indication that the market is actually responding to that order block, and I don't see it yet. And on the 5-minute, it needs to be, or some relevant time frame. So I want to see something
chicken feet.
like.
Have you heard about chicken feet?
What was that? Your lunch?
What's chicken feet?
Chicken feet is apparently German for cold feet. So when you have cold feet, you have chicken feet. Because Dirk was in here earlier, and he said he had chicken feet.
Oh,
I never said exactly why, but
I thought you were talking about some food delicacy. Chicken feet is a delicacy in some cultures. I thought you were talking about that.
Not my country. We don't eat chicken feet.
It's dog food where I come from.
Oh, do you like dog food? That's like a delicacy where you come from.
It's
dog food.
Chicken feet is dog food in Poland.
Oh, I thought you mean that dog food is a delicacy.
It is as well.
Yeah.
My dog eats like a queen.
Whenever you are done, Victor, we're gonna do a trading quiz. It's gonna do a quick little trading quiz, and the winner will win. We're gonna do a little giveaway here. Whenever you're done with...
I'm actually done. I was looking to short this. I'm looking for a short on because we're getting into demand zone on a pound dollar, and we're quite extended. We are above 100% ATR. So anytime now, the market should start to reverse, show us some bearish structure. And before it does so, it will start to react, at least most of the time it does, start to react on some structure. And I thought this 15-minute could be that structure. We had the 5-minute reaction, but it was sustained, or it was popped back by that bullish order block on the 5-minute. Maybe it's going to come now. Who knows? But that order block has already been, that bearish order block has already been invalidated. So it's basically out of the window, and it's not here anymore. So we'll have to wait. We'll have to see if we can get that reversal. Maybe it's happening right now, a reversal on GU. That's a very nice price action. If it closes like so, right after tapping into that order block, we need to see some kind of reversal pattern. Then I can take the trade live in front of everyone. But that's not the case yet, and my time to go get some delicacies has come.
All right, let's go.
All right, see you guys
Please.
in an hour and a half.
Yep, perfect.
See you in a bit, mate.
Okay. Let's see. I had a gold open on. No, not gold open. I had a trade open on gold. Gold open on trade.
Gold open on trade.
Yeah, but I don't know where my drawings went. I had it all up here. What?
Enjoy your dog food, Victor.
Thank you, Henry. Thank you. Bye-bye.
Okay, so I had a bunch of different... Oh, there it is. This is the trade. We're in this one, guys. Looks absolutely fantastic. This is a typical
very nice
bull flag continuation trade right here. I'm gonna go ahead and I'm gonna move my stops to a little bit up here. Okay, so what I'm gonna do now is we're gonna do a trading quiz. Right, a trading quiz. The winner is gonna win not 100, it's gonna win 10 hub credits.
That was almost a Freudian slip.
Almost like yeah. Yeah, that's right. A 10 hub credits, and the way we're gonna do this is I have 5 questions. You're gonna get about 2 minutes to answer. It's gonna be A, B, C, D. It's gonna be 4 different answers to this question. The first one that gets it will win that question. Okay, so the first one that has the answer will multiple choice. That's right. Thank you, Victor. Just typed in the chat. The first one that gets the answer will be the winner of that question, and then we move on to the other question. And the last question will have 2 points instead of 1 point. So the questions will have 1 point each, and then the last one will have 2 points. That's a little bit more advanced. And the one with the most right answers will be prompted to send me an email, and then you will get instructions in that email on how to confirm that you're the actual winner, and then you'll be credited 10 hub credits to your The5ers hub account. Now, what you need to do is you need to have an account with The5ers. You need to have a hub account. If you don't have a hub account, go to the5ers.com and sign up for that. Do you need to have an evaluation to have a hub account?
No, don't think so.
I don't think so. Well, anyway, you should send the email.
You need to have an
from the
evaluation to
email.
join the Discord, but not to have a hub account.
Right. Okay. Perfect. All right. Let's begin. Let's begin. I'm gonna change. No, I'm not gonna change. Okay. Present. Stop screen. Can I present something new? Image file. I'm gonna stop that one, and I'm gonna save. Let's just see. Is this correct? This is right. Okay. So when I open this up now, we're gonna not each question is not 10 hub credits. The winner of every question, the one that has most right answers, will win. If we have multiple winners, then we'll have a question between you two. Let's see how this works. Might be very cool or not. So we'll see. Okay, the first question. You have 2 minutes to answer. What short pattern is categorized by two distinct peaks at roughly the same price level, indicating a potential reversal from an uptrend to a downtrend? Is it A, a double top, B, head and shoulders, C, symmetrical triangle, or C, pizza slice? All right.
Surely it's
one.
pizza slice, is it?
Yeah, okay, so the first one with the right answer. Now, obviously, we have a lot of people saying A. If you saying, actually, everyone says A. One said B. So we have a rule here as well. Now, if you're just going to spam A, B, C, D, and try to get the right answer, you're disqualified and you're out of the game. But the first one, they got the right answer. Is obviously this is a double top. Okay, double top is a trading pattern where you have two distinct peaks at roughly the same level, and this is obviously a top formation. It happens usually at resistance. Okay, so the first winner is Robert. Okay, let's move on to the next one, and I'm gonna write the question. No, I'm gonna answer the question, and then what I'm gonna do is, and you can stop writing A because we already have a winner. I'm gonna ask the question, and then I will show you the. Okay, let's go. Yeah, no, it was not. It showed up in StreamYard as Robert first. You might have done it. I'm gonna go with no, you didn't. I mean, I have. You did not beat Robert. I have actually. Well, actually, let's go to the real live chat. Let's use the actual live chat and not the. Robert was actually first, so we're gonna go with Robert. If you're not okay with that, come on the live stream, see if you can beat me on a one-on-one trading challenge, and you'll get a 20K high stakes bootcamp account. No, high stakes account. Two different accounts. All right, let's do this. Let's go. Which candlestick patterns typically signals a potential reversals and consist of a small body with long wicks on both ends? Is it A, a hammer, B, a doji, C, engulfing, or D, space rocket? All right, so I don't even know the correct answer to this. Which candlestick pattern typically signals a potential reversal and consists of a small body with long wicks on both ends? That's a doji. Okay, who did a type a B first? Let's see. Dun, dun, dun. Alex says a hammer. Sorry, man.
When did the answers for question 1 stop and the answers for question 2 begin?
That's a good question. So going forward, we have to do so the next question, number 3, you have to do a 3 and then the right. But I think it was it must have been this guy, right? Because that was when I started at 42 was when I started typing it up. Yep, that was it. That was the one. Now B, Victor says it's someone else, but I don't believe it is. Okay, let's go with that one. I have no idea like how to type that out, so let's just do this. Okay, that's winner. Perfect. For the next question, we will do what you have to do. This is question number 3. So what you have is you first have to type number 3 and then the letter of the right answer. Okay. So right now we have these questions right now is 1 point each, which means if we have one winner on each of these, but we'll have only one winner on the last question, that means the one that gets the last question right is the one that wins. And this is because we're going to do the last question quite difficult to win. All right, let's see. Next question, number 3. Okay, so you have to type number 3 and then the letter. Only the letter is not correct. So we know which question is which. Question number 3. In technical analysis, what does a bearish divergence typically indicate when the price is making higher highs, but the RSI is making lower highs? So the price is making higher highs and RSI is making lower highs. A, continuation of an uptrend. B, trend reversal or weakening momentum. C, sideways consolidation. And D, alien invasion. All right. What do you think? What do you think? Is it a continuation of an uptrend? So let's see. Price is making higher highs, but the RSI is making lower highs. So this seems so the RSI is a oscillator, and if the oscillator is failing to create higher highs, that shows weakness in the oscillator, but strength in price. So it should mean that that there is a potential trend reversal coming, and it's a weakening of momentum. So that is B. Now let's go. Which one is the first one to write 3B? That's Alok, right? Perfect. The winner is Alok. Last question. Last question. This question could potentially be the winner. What you have to do now is is this the last question? No, okay, it's not the last question. This is the fourth question. This is not the last question. Okay, this is the fourth question. 1 point still. You have to type 4 and then the character that we want. Right. What is the ADX, the average directional index, based on? Is it A, the difference between the plus DI and the minus DI? B, the sum of the plus DI and the minus DI? Or C, the moving average of price changes? Or D, the difference between the RSI and the MACD? Oh, this is a good one. Still 1 point. Okay, so you have to type 4 and then the correct letter. Do you know this one, Mike?
What is the ADX? This one I don't actually. Not off the top of my head.
The average directional index is based on a previous indicator called the directional movement indicator, and that is based on plus DI, which is directional movement to the upside, it's bullish movement, and then you have minus DI, which is bearish movement. And the ADX is rising when there's more plus DI than there is minus DI. So if plus DI outweighs the minus DI, the ADX is rising. So the ADX is the difference between the plus DI and the minus DI. So the correct answer here is 4A. So we're going to go and we're going to look at that. We have a winner right here. And this was difficult, obviously, because we had a lot of people saying many different things. And the winner is Lil Soksu. Okay, let's go. We got Diana coming in shortly as well. Should be after the quiz here. Let me just create a little link for her. Right there. Okay, last question. 2 point question. Can be a quite difficult one. Let's see. Now you have to write 5 and then the letters. This will be question number 5. This will be 2 points.
Guys, I can't. You can't just say 5C or 5D without even knowing what the question is.
Oh yeah, I'm gonna have to remove them. So the rule says that if you try to sheet, basically you're disqualified, which means that Pip Hunter and the guy that just removed his comment will not be able to win anything today. Okay, there we go. Let's go. This is the question. 5th question. Final one. Dun, 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 dun. Can you turn back the chart? Well, I can't turn back the chart because we're doing a competition here. What is survival bias in the context of the S&P 500? A tendency to only consider stocks that have remained in the index. B, the tendency to consider all companies that have ever been in the index. C, the tendency to exclude companies that have been removed from the index. Or D, the tendency to overvalue the performance of the index. A lot of different questions here. This was
this
actually
one I have absolutely no idea. Where did you get this one from, Donovan?
Give me a second here. I have to just switch over a couple of tabs. So just make sure that I'm not switching it over wrong tabs, showing like private information. I'm just gonna do it like that. Okay, so I'm gonna give it a little bit, a minute or so, to see if we have everything correctly here. Now this is actually worded not perfectly, okay? This is definitely not worded perfectly, but the winner. So the survival bias here in the context of the S&P 400 is the fact that bad performing companies in the S&P 400 is being removed from the index and replaced by better performing companies, which means that it's a survival bias, creates a bullish bias in this case, because if you remove the bad performing companies and replace them with better performing companies, then the overall performance of the index will be better and more long-term sustainable. So in this case, the right answer is A, the tendency to only consider stocks that have remained in the index. And so that's number A. Now I gotta admit though, that's worded a bit bad here, because basically what it is, it's you're removing companies that has poor performance. Okay, but that's 5A. Who was the first one to write 5A? Interesting that most of you thought it was B, the tendency to consider all companies that have ever been in the index, which is not right. So a lot of you were wrong on that one. Very few actually typed in A. It took a very long time before we had an A, but this is actually Spartan. Oh, right, there we go. Just play games. I'm happy you're here, because otherwise someone else would have won that one. That's right. Just play games is the winner of this competition. Now, what I want you to do is just play games. I want you to write an email to jonathan.r@the5ers.com. Now, you need to do that right away. You need to do that right away. If I have not received an email within the next few minutes, we will pick another winner. We will pick Spartan Min, this guy basically, if you don't email me in the next couple of minutes, because you have to confirm it here live that the person that is emailing me is actually the one with the account, and you have to do that in right now. Now let me bring up TradingView here while we wait. Look at our beautiful gold trade here.
Looking solid.
Getting any emails? So far, there's no email. Let's see. Just play games. If you're here, then send me.
Torturous on this.
Sorry?
I said the suspense is torturous.
Yeah, I mean, yeah. Okay, where's that email? I'm not getting an email. It shouldn't take more than 2 minutes, right? I'm gonna set a timer for 2 minutes. Done. Okay, apparently he sent an email. Okay, oh, there we go. Okay, so now I'm gonna reply to that email. Okay, so I've just sent you a reply. I wanted to check your email, check the reply, and then I want you to follow the instruction in the chat. I believe this is survival bias as known as in the overall trading space, but we're talking about only in the context of the S&P 500. So if you Google survival bias in the context of the S&P 500, then see what you have. Okay, that's right. Just play games. You've just won 10 hub credits. Congratulations, man. We're going to do more trading challenges and more trading quizzes like this one in the live stream. So make sure, guys, that you stay in. Well, I'm not going to do more today, but tomorrow and the day after. So make sure that you do like and you hit that subscribe, and also make sure that you hit that bell notification so that you'll get notified whenever we go live. And we also have some exciting announcement. What is happening in the background? Did you see that?
No,
I'm sure if hopefully you saw that, viewers. My screen in the background is like that. That would be probably what I would think happens like right before an alien invasion or something like that. Like all the screens just start flashing things, There's definitely something going on here.
we're
Anyway.
experiencing a geophysical event.
Yeah, I mean that's what happens. We got so many people in here, and everyone's just probably hitting their fist in the desk because they didn't win, and this is causing a worldwide disturbance. The announcement that I was going to announce is Thursdays. We're going to go live Thursdays as well. Sometime at the end of this month, we're going to be live on Thursdays as well. So you'll be able to tune in and listen to us speak about alien invasions and trading patterns. All
alien trading patterns.
Alien trading patterns, that's right.
For those of you
Trump
who just can't get enough for us.
Yeah. So that was fun.
It was a little bit anticlimactic, I've got to say.
Really? I thought it was super fun.
I feel like we need better sound effects to go with it.
Oh yeah, definitely.
We need some drama added to it. We need some pizzazz.
Yeah, well, I think it would definitely be cooler if we had like better graphics for it and everything.
All in good time, Jonathan. All in good time.
Yeah. Can't wait to hear what relevance they have. What do you mean relevance? Do you mean us as like analysts? What relevance do we have, Mike? I do feel quite relevant.
I'm totally irrelevant.
No, I'm not.
Irrelevant. You're not.
But I feel like I'm very relevant.
I'm just here for comedy effect.
Yeah. Very fun. Oh, you mean alien invasion and chart patterns? Yeah. Well, that's a tough one. It's a tough one. All right, we don't have any music, do we? Do we have music?
No, we don't have any music on since.
Haven't we had music on all day? Wow, that's ridiculous. It had to have some music.
Recently, when I joined, there's been no music. I figured you guys.
Oh, nice. Listen,
I figured you guys just didn't enjoy the music. That's why I thought. Every time I join, there's no music. I thought, okay, all right. They're feeling anti-music.
Well, I just had some good conversation with Dirk that I felt like I didn't want. I only want to listen to him and his voice.
That's understandable. I can
It
relate to
is.
that.
It is. Yeah. And then and then he started talking about chicken feet. I'm like, yeah, I gotta hear this. Okay, so what do we have here on gold? I quite like gold. I think you know, we got that bull flag pattern happening, and then if we add the fibs here, you can see that we have got the my TP will be right in the middle of that reload zone. So yeah, I think I quite like this trade. Hopefully, definitely like it. It was kind of like a low time frame trade that might turn into a almost sort of a swing trade, perhaps. Let's see. Gonna be a back to break even though if this hits my TP on that high stakes account. You know what? I kind of want to enter a new position here, like add to this. I think I should.
Confidence there, Jonathan. Confidence.
Yeah, and I don't know if it's confidence or just greed. Like most of the time, it's probably just greed.
Gets the best of us.
Yeah. Okay, so I'll enter a. Basically, what I'm doing is I can show on. Better to show it on MetaTrader here. What I'm doing is I have. So my initial stop loss was down here, and then I moved stops up, which means I removed some risk on that one. So if I take the risk that I removed and then basically add it back, if I hit that stop loss, I will be losing $18 plus 30, 40, 48. Because I'm adding $30 here. It'll be the same stop loss, and then I'll be. Yeah, let's do that. Try that. What do you guys think in the comments? This is a bad idea? Ooh, did I when do we have the New York Open? That's in is that in 30 minutes or 1 hour and 30 minutes?
1 hour and 30. So you still got a bit of time.
Yeah, let's go. What do you guys
Cool.
think is a bad?
Right, well, listen.
Yep.
I'm gonna leave you to it. Great
Yep.
to see you guys. I'll be back again same time tomorrow. Look forward to seeing you then. Otherwise, I'll catch you in the Discord.
That's right. See you tomorrow, man.
Cheers, man. Take care.
Take care. All right, we got Deanne in the background. Can I add you? All right, let's go. How's it going? Welcome.
Good morning. How are you?
I am great. Good morning. How are you?
Doing pretty good. I think I have a little bit of a. Can you hear a double?
No, I think it's good.
Oh,
I
good.
can hear
Okay.
it. Oh yeah,
I'm doing
maybe
pretty
a
well.
very small echo, but I think it's good. It's okay.
See if I can fix it. What are you looking at this morning?
Well, today we're trading gold. Entered a nice little position here in the morning, and now I'm adding to that position. I feel like adding to that position was definitely that might not have been a very good idea, but maybe not a also not a bad idea. Like I don't know, not the best idea. Not the best idea, but we'll see.
I think it looks good.
Yeah,
Good morning, everyone. Thanks for saying hi. I've been trying to catch a little bit of gold as well this morning. Looks like
really?
you probably were in much earlier than I was.
Yeah, I guess you were probably sleeping when I entered that one. Yeah. So it's early in the morning for you. How are you like how are you setting up your day when you're going to be trading? Are you like do you have any routines on how you begin your trading trading day?
Yeah. Sometimes it includes a full warm up. So, like getting my breathing right and getting my body right. And some days, I feel like I don't need that as much. I'm already pretty relaxed and calm going into the market. So I just get right to it. So it just kind of depends. What about you?
Well, I think I was quite big with the whole idea of having like very strict rules and like having this like gonna meditate 10 minutes before and go on a walk every day. But I kind of lost that in the last couple of months because like it feels like I've been catching a new cold every week for the last 2 months. And the kids have been home from school. My fiance is sick as well. So it's like you take all of those routines and you kind of throw them out the window for 2 months, and it's difficult to get back into that rhythm again.
Absolutely. Yeah, we had the flu go through our house too, and it just takes a while to get back to it. And, same thing last year too. It's just this time of year is just absolutely brutal. And I think that's the thing about the three elements of trading, right? You have your strategy, your risk management, and sort of your personal factors, your trading psychology. That is a constant ongoing, it's like working out. You take a break from the gym and you got to get back to it and you got to find that rhythm again.
Yeah, no, definitely. It's seems like everyone has the flu now. It's like it just goes around all over the world. Everyone I talk to either just had the flu or is knows somebody. But I guess that's just how it is. That's the time of the year. And then of course also after the pandemic, it kind of feels like the flus are stronger now than they were before. Because yeah, definitely interesting times that we're living in.
And the season change too. That gets us every time in around like October, November, depending on where we've been living. It's like it gets cold and then everybody's sick again. So especially when you have kids, boy, they bring everything home and it's so easy to get sick.
Yeah, they do. Ever since when I had my son, it's just been the same every year. They start school and it's just here we go. But I guess at some point our immune system should be building up, and but I know it's been a couple of years now. Hopefully I'll be having a very strong immune system soon.
Well, I hope you get back to feeling better soon. Looks like gold is taking a little bit of a dive.
Yeah, I bought the absolute top there, it seems.
Well, I was still trying at the top too. I mean, it's not a top until it turns, right? And so it still looked good there. I still think there was a valid reason to enter there. It just turns out that that's where it was going to turn. And I think somebody said, yeah, buyer's trap. Somebody else said time to short.
Yeah. I feel like every time I go long, there's always going to be someone in the comments saying that I'm shorting here, like this looks like a great short.
Well, if somebody's buying, somebody's got to be shorting, right? That's just the nature of the beast. So
yeah, that's just how it is. I do see, however, if you look at the 50-minute here, I do see that we have let's see if I can add the fibs here. I do see that we're hitting right now the 50% level of this up move. So even though, you're in a position and then when it starts moving against you, immediately obviously you're going to have not very positive feelings because of that, but it's coming back down to support level. Right. It's still the same. It's still the same trade and the same idea that we were in before. But let's see what happens here.
And the trend has been very strong upward. I mean, it's made a huge move overnight and has been moving upward for since like, let's say Friday morning. So that is a big move.
Yeah, I definitely think the momentum is to the upside here. I mean, of course, the market is not going to go in a straight line up. We'll have moves in either direction before it hits that target. But I think overall, it looks good as continuation to the upside. Let's see what we have. Getting a bit nervous here. I really like this trade because we had in the morning we looked at this as sort of a flag, a bull flag, where we had this and traded that, wanted to take that breakout. And if you double that, you do that measured move, you see that it hits that upper resistance quite nicely. So if this hits TP, then this is going to be a very good example of a bull flag type of trade. But maybe do you have any screen you want to share?
Yeah, I can share my screen. Let me get set up here.
Yep. Victor asked how many pips? How many pips what? How many pips to TP? I don't know. Let me see. From my entry to TP, how many pips is that on gold? I don't even know how to calculate the pips on MT4. Let's see if I
there's
can.
a really helpful indicator that sorry, not indicator. It's an EA or a bot that I use on MT5, and it's called Position Sizer. It's from earnforex.com, and it's a free tool.
It's the one I have here.
It is an amazing. Oh, yeah, there you go.
Yeah. No, we've actually talked about this one quite a lot in the live stream. I think it's very good. So highly recommended.
And that should calculate your pips for you and your risk, everything. It's a great tool.
It's really, really good. Let's see if I put in the. But shouldn't like if I use this tool, like take the trend line tool and then just drive from entry up to TP, it says right here, 2,650. But what?
On MT5, it's a little bit weird because there's like an extra zero, so it's almost like.
Right.
I think it's 250 points instead of. I trade futures on MT5, so it's been a long time since I've traded Forex on it. So I don't remember for sure, but.
It is a bit confusing. So on. Let's see. I'm gonna see if I can find it in Trading View. I really need to make sure I know how to calculate to get the pips out of the gold move. Okay.
Oh, you're on gold.
Yeah. Oh,
but it's
right.
If futures, right?
No, it's just well, this is gold on the fibers, which is not futures. If I click the scroll wheel, then if as it says in the comments, then this comes up, and then I can measure. Oh, okay, that's nice.
Cool.
So from that entry, yeah, it is. So yeah, that's right. So 2,600 points, which would then be. How much would that be? Could someone help me out in the comment here? So if it says 2,600 points, then what would that be in? If someone asked for pips, like what would that actually be? 200. Okay, so it would be 200. So basically it would be 260, 200 pips. But would it be 260 pips? Because how can 2,600 become 200? Must be 260, right? You remove the last number, if I'm not mistaken. Hopefully someone in the comment section can confirm. Okay, so 200 pips is 2,000 points on gold. So it's 260. That seems like an awful big move, but I guess it's just the nature of gold. All right. Well, that answers that.
Okay, let me, I can flip over my screen here.
By the way, guys, we do have this event coming up. Make sure that you go to the description of the live stream, and you'll have a link to sign up for the risk management event that we have on the 11th of March. And the first 5,000 that sign us up will be gaining access to a specific trading contest where you're able to win some very nice prizes. So make sure that you check that out. Ahmed says that my TP is almost ATR. Okay, so is that a good thing? I mean, the ATR is the average true range. Is that okay? So my TP is it at the one-time ATR, or is it? I gotta look that up.
How do you determine your take profit?
On this one?
Mm-hmm.
So on this one, it's two things. So the first thing I did was I looked at this as a bull flag, and what I do then is I use the measured move, which is basically looking at the low of the flagpole to the high of the pattern, and then I take that, or well, basically something like this, and I take that and then I put it at the breakout.
Okay.
And then that would be the measured move. Yeah, but then you see that it's much higher than TP. That's because if I go to the 1 hour or even the 4 hour, that's the area that we broke down from. And you have some reaction here. So I think that's just a good resistance. But I also feel like I might be asking for a bit too much here. I feel like my TP might be a little bit too high. So right now I got the TP here, but I might change it to lower because I do feel like it's a little bit too high.
Well, we're kind of price on gold is coming down to some moving averages, so that might give you a little bit more idea about structure, or like maybe would you consider moving your stop a little bit to reduce some of the risk?
Well,
or do you leave your stop?
No, I have increased my stop. So I had my stop here, so I increased my stop a little bit, but then I added a new position. So right now, obviously, it doesn't. I'm gonna start closing parts of the position if we fail to hold this level, because you can see now if you go to the 1 minute, you see a very clear pattern where we had one up move down and then one big continuous trend to the upside. Then we broke down, bounced here, but we failed to reclaim this level. So what I'm thinking is we could create some sort of, you know what, I have to switch over to trading view because it's just trying to do good TA on MetaTrader is very difficult. Yeah. So I think okay, this is gold here, and this is the trade, and let's see. I think the trade was from here. But that's the initial stop loss, and then TP was, I believe, somewhere around here. That's the trade, and then if we go into the 1 minute, you could see perhaps a double bottom like this. But if we fail to hold this level as support, then I will have to perhaps start closing the position, because we at that point we no longer have, it's no longer that trend that I wanted to enter in the first place. So I don't know if there's any news or anything like that.
There's high impact news at 10 o'clock. That's in about an hour and a half.
Let's see if I can. An hour and a half. Yeah, that obviously shouldn't affect what's happening now, I believe. But you know, on the lower time frames, we can have moves like this without really any. So.
Right, and sometimes trades lose, right? I mean, you can have a great trade, and sometimes they just lose, and it could be a perfect setup. All the conditions are great, but not every trade that you take is going to win, and it doesn't always mean that you can solve, you know, what you did wrong. Sometimes trades lose. That's just part of it.
So I saw that Trump tweeted something about less than an hour ago. It was nothing. He has tweeted tomorrow is going to be a big night, and that's all he tweeted.
What does that mean?
And yeah, I have no idea. I have no idea at all. He tweeted tomorrow's going to be a big night, and I guess that yeah,
Not
good,
for me.
good for him. Good for him. I think maybe a lot of people take that into the context of the tweet he did over the weekend, well, yesterday, with Bitcoin and crypto. Maybe that's going to be, maybe it has something to do with tariffs. I don't know. Could be whatever. But the market, let's take a look at the dollar currency index, what we have for that. Look at the daily. Yeah, that it's actually reacting very quite bearishly. So if we fail to hold that support, then we should be seeing some risk on returning. So I got this long open on the S&P 500, which I think is starting to look quite good.
How long are you holding your positions? What's your, I know it's kind of swing trading, but what would be your average hold time?
Let's see. I'm going to see if I have any statistics on that. Well, on a trade like this one, a trade like this on the S&P 500, these trades usually, because what I do with the S&P 500 is I buy every time we have a big move down to support. I'm just buying, and then I'm selling at the resistance above. So we can look at. I remember entering this one. That took about probably 2 weeks. I think between 1 and 2 weeks. Then I have positions, of course, that have been open for a few weeks. But I'm gonna go in and I'm gonna look at the actual statistics, because I do have one funded account with like 400 trades. And that should be good statistics. Okay, so the average The average trade duration on that one is about a day, but that's many different strategies. So on swing trading, I would say it takes between probably like 3 days to a week, sometimes even longer.
Okay.
Yeah. What about you? I understand that you try to get in and out of the trade within a day, right?
Yes, my average hold time for losers is about an hour, and it's about 3 hours for winning trades. So pretty short.
Nice. So I like that you're holding the losers shorter time period. Is it because they get invalidated quicker, or is it because you don't like holding on to the losers?
I think it's basically just a function of my take profit is generally further than my stop loss. So if all things were equal, it takes less time to get to a stop loss than it does to get to the take profit.
Yeah, that's actually very logical when you put it like that. That makes sense, of course. All right, maybe we can take a look at some of the things you're watching.
So I have my screen up. I don't know if... Okay, there we go. Let's make it a little bigger.
Perfect.
Okay, so this is the NASDAQ. So if the numbers look a little different, I'm trading futures, but the NASDAQ we have on the left side, this is the 40 range chart, and on the right side is the 100 range. So you can kind of think of this as like a higher time frame on the right, lower time frame on the left, although these are not time-based charts, so they are like a higher range and a lower range. ADX on the bottom is the blue number here. So ADX is above 20 on both the lower and higher range charts. And so NASDAQ has started to pick up a little bit. You can see we have this pretty long-term uptrend on NASDAQ since, I'd say, about last Friday, February 28th. And price has just been moving higher from there. There have been some pretty, wicked pullbacks. This one's kind of nasty. And then obviously there was a really big one overnight. I guess that was right after the open tonight. So, and then price has just been meandering up. So that is what I'm looking at in NASDAQ right now. Price has just kind of pulled back to, this is a 55 EMA on the 40 range. Price pulled back to the 55 EMA, kind of dipped below and is starting to push higher. So NASDAQ for me is looking pretty good. We are an hour outside of the open, and there is high impact news at 10 a.m. So I want to be aware of both of those. The high impact news at 10 a.m. Eastern time is ISM manufacturing PMI. So that could, that has the potential to impact the NASDAQ quite a bit. And then let's look at gold here. So this is gold, and same thing, only I'm going to switch this to 20R. So that's the 20 range, and this is 50 range. Gold doesn't move as many points as the NASDAQ does, which is why I'm using a lower level. So on the NASDAQ, on gold, we had this big pullback that we've been watching, but we are above on the 50 range. We are above the 55 moving average. And so far price has kind of, popped through it, came back, touched it or tapped it, and then is pushing higher. So I still think it looks good for a long. I'd be looking to get in if we can start to get evidence of pushing higher. On the ADX, the 20 range is just barely below 20, which is, again, that's the threshold I use. And on the 50R, it's 19.98. So just barely below the threshold. So it looks like someone's asking what's a range. Basically, if you remember, I can never remember what they're called in math class when you were in elementary school and you did like We talked about this, but I could never remember the
I
name
remember.
of it.
Yeah, I
Cat
remember.
and-
This is some animal, right?
It's a cat. It's like cat whisker. I don't know. Somebody in the chat
whiskers.
tell me.
The whisker. Yeah, it was
Is it
the
whisker
whisker.
plot?
Yeah, I think
Something
it
like
whisker.
that.
I think so.
Basically, what a range bar chart does is take out the element of time. So instead of looking at a new bar, box and whiskers, thank you,
That's
Steven.
right.
Instead of looking at the time, we're taking that out. So we're just looking at the movement. And what that does for you is it sort of eliminates some of the chaos that you can see in a time-based chart. In a time-based chart, every time an interval passes, you get a new candlestick. So if it's a 15-minute time-based chart, every time you get 15 minutes, you're going to get a new candle, but nothing might have happened. And so when you use the range bar chart, and I use both, but I like the range bar chart because it just gives a cleaner, clearer picture of what's going on. And if there's a time period where nothing has really happened, no new bars will form, or very few bars will form. So it just makes it a little bit cleaner to look at. And yes, similar to Renko, absolutely. Like these are just different ways of sort of, making the chart a little cleaner. And, to me, time isn't necessarily an important element as far as like 15 minutes passing, but the movement or the volatility in the asset is quite important. So just another way to look at it.
Yeah, and I think it's a really, it's not. Renko is a bit different though, but the range. I don't know if you're familiar with point and figure charts where you have like X and O's, and you have a specific price range that the asset has to move before there's a new X or an O, and it's a very good way of basically removing all the noise. Like you said, you only see the trend, you only see the actual direction in the market without seeing any of the any of the price ranges. So it's actually a really cool idea of using that in your analysis.
Yeah, it helps a lot. I had a hard time giving up the time-based charts. I still like to look at them. I've been looking at time-based charts for years and years, so it just makes more sense to my eyes to see that. But it is helpful to kind of eliminate, time is important as far as time of day when you trade time of day. But 15 minutes is just arbitrary. 4 hours is just arbitrary. So it is helpful to kind of clarify what really matters and what is kind of extra.
I think also Renko charts, they have to form a new Renko chart. It has to move in just the same direction from open to close. I think on the Renko chart there's no. I have to look that up actually, but the Renko charts are. There's something special I know with the fact that. Never mind. I will have to look that up.
Yeah, I don't really know anything about Renko charts. I know what they look like, but that's about it. I don't use them at all. All right, let's take a look at the time-based chart just because, it's helpful if that's what you're used to looking at to see that as well. So this is the NASDAQ. On the left to right, this is 1 minute, 15 minute, 4 hour, and weekly. So for the week, last week and the week before were both down weeks. Last week was a pretty significant down week and took out some of the previous weekly lows. So swept some of these lows down here. So I'll add them on there. Let's do a different color here. Took out some of these lows and now price is above that. So will be interesting to find out for the NASDAQ if price, and these are, swing lows. So meaning that it's a low with a higher low on either side. So to me, that's pretty significant. Took out 2 swing lows and is now above that. So if price stays above that, that's going to be pretty important information. But the momentum last week has definitely been down. but also kind of is jumping out to me that this is very, very much a range. So kind of like the market isn't sure what to do with itself this week, or not this week. Actually, this has been quite a while. So November, and not surprising for me, trading the NASDAQ has been really, really difficult. Not so much in November or December, but really started in February. So February kind of started here, and you can see it really didn't, it made a lot of movement. So I took a lot of trades, but it never really super progressed anywhere. So looking at the 4-hour time frame, we had this big move down last week, and now prices dipped below. These are the swing lows that we talked about. Price dipped below and is kind of pushing back above. So we're just above those lows a little bit. So again, something to definitely pay attention to. On the 15-minute time frame, you know, I like to, on the NASDAQ especially, kind of look at, to look at the market session. So looking at the market session, you can see here, we had a bit of a gap up overnight. Price came down, established kind of, so far has been a low during the Asian range session. During Asian session, price moved in 143%. So I know it's a little hard to see, but right here, 143%. So that means that the depth of the Asian range session was about 1.5 times compared to the average over the last 50 periods. That's pretty significant. And then the London Open, almost the same, 135%. So not quite 1.5. Took out the Asian range high and then came back inside the Asian range, but continued higher. So maybe we'll see continuation in the New York session. Who knows? All right. Right now, though, if we were to mark out on the 15-minute chart, let's get rid of, actually, let's mark some of this. Keep the Asian range low here. Do y'all label these? Asian range low.
Shouldn't it be possible to get that into an indicator? I'm sure there's an indicator that points that out. Like,
yep, absolutely. There are quite a few. So this is an indicator that I'm using, but I'm trying to think. I have another one too that labels it as well, but I want to take it off. That's what I'm going to do here in just a second.
Right,
so
okay.
Here's the London Open low. That's what that swing is. Oops. All right. And then take this off so I can see a little better. So right now, 15-minute swing low. We don't really... Here's the swing high. This is our first 15-minute swing low. Depending on how this bar closes in 6 minutes, it could be a swing low here as well. But as of right now, this is our 15-minute swing low. And we have the open now in about 50 minutes, 50. So the market might kind of range just for a bit. Who knows? Let's see what happens here. Clean this up a little bit.
you have the 1 minute, 15, 4-hour, and weekly.
Mm-hmm. Yeah, I find that's kind of a good combination to give you kind of a higher higher idea of what's going on. You can see that if trading has been tough for you for a bit, this is why. This makes sense if you trade the NASDAQ. Looking at the 4-hour and the weekly, you know, the momentum has definitely been to the downside. And then at the 15-minute, yes, it's been to the downside for a long time, but we have this really nice pullback higher. And then the 1-minute, you know, I don't think gives me a whole lot of information except for kind of a zoomed in view if I have an idea of what's going on a higher time frame.
Like that. I mean, I do think that multi-time frame analysis is quite important. So I do like that you have all of these charts up at the same time, and sometimes zooming out and looking at the weekly as well to get that understanding of what the overall structure is. And you know, the indices now is just difficult, definitely.
Yeah. And you know, this week we have NFP coming up on Friday. So right now we have 50 minutes till the open. ADX is starting to dwindle a little bit. So on gold, it's below the threshold of 20 on both range charts, and it's starting to decline a bit on the NASDAQ as well. So that could be sometimes, you know, a function of moving into the period right before the open, like the last half hour to 45 minutes before the open can kind of, you know, get a little quieter. And then again, we have that high impact news event at 10 a.m.
Yeah, let's see what we get. Definitely, it's always, you know, it's always a bit exciting to see what happens on the market open. I'm hoping that we can get a push higher on gold. We're holding that support for now. Actually, I'm going to take a look at NASDAQ. I haven't. Well, what I see on. Wow, the NASDAQ went way lower than S&P 500, and it's not really. There's definitely weakness here in the NASDAQ as compared to the S&P 500.
Do you want to flip over to your chart? Otherwise,
yeah.
I have a divergence chart somewhere here.
Yeah, I would love to look at that.
Yeah.
Well, your chart.
Oh, on my chart. Okay, gotcha. Give me 1 second
if you have one. While you look for that one, I can pull up mine here. You know, there's this thing with confirmation in the indices that you know, back in Charles Dow's time, he talked about I can't remember exactly which of the indices it were, but I think it was the industrial index and the railway index. They had to confirm each other for a trend to be in play. And we could, for example, look at the NASDAQ and then compare it to other indices. I'm going to remove some levels here. And the confirmation would then be if the S&P 500 is making, you know, higher lows. Look at the S&P 500. And I would actually, well, I don't know, like, it might not be that different, because if you look at this low, that low, and this low, and then you go to the NASDAQ, you do have this low and that low. I think what I'm focused on is like this resistance, like maybe a resistance here. But I believe that what we should be watching is the previous low, which is that one on NASDAQ, and this one on the S&P 500. So the S&P 500 is actually creating a lower low, and NASDAQ is also creating a lower low. US 30 though is well, I guess we have to look at this as the last low. So I guess there is confirmation here between all the indices. Let's look at the same with the Russell 2000 as well. Maybe you have another view on that.
I guess for me, I use a shorter time frame than you do. And so I'm looking at the daily here. Let me switch over. I'm going to take mine off for just a second and put on a different screen here. I think this is it. Okay, I think that's up. I think you might need to reshare it again, Jonathan.
There it is.
Okay, so you were looking at the daily, and I would tend to kind of be a little bit shorter time frame. And so for me, I'd be more looking at like the 4 hour, and they are for the most part pretty in sync on the lower time frames. So we have pretty significant downtrend recently. Prices move pretty strongly lower. Let's see if we drop even lower. They look pretty similar. We've got kind of this nice pullback after the big movement down. And as of right now, it looks like they're pretty in step again on the lower time frames.
Yeah, I think the idea of confirmation with the trend should be done in the high time frames, but this is also, I mean, if you would see very clear differences in the 15-minute, then you obviously would have a divergence there. Do you have any idea of if one of them are or is diverging? Which one would you? In what direction would you trade if the S&P 500 is bullish and NASDAQ is bearish? Is one of them leading?
So which would I pick?
Yeah, no. Well, I guess you could trade the same, just switch the direction on one asset. But if the S&P 500 is bullish and NASDAQ is bearish, do you think? I mean, one has to be leading the other.
So if it was one was bullish and one was bearish, I would probably lean towards not taking a trade in either one, just because there isn't agreement. But sometimes it happens where you see kind of like one asset. So between the S&P and the NASDAQ, one will lead and then the other will follow. And so it's almost like a cheat code where, let's say, for example, there were a period of time a couple months ago where it was like they'd be moving down and then ES would start to go higher as NASDAQ was kind of holding or continuing down. But it was kind of like if you waited at that point when they're not in alignment, if you waited at that point, ready for, okay, is the NASDAQ going to turn? You could kind of use the ES as or S&P as an indicator that, okay, maybe the move is going to turn here. And so if you're looking at them together, it's easier to do it that way, to kind of wait and see if the second one is going to eventually confirm.
Right, yeah. No, that makes sense. Go over to NASDAQ, see if I think NASDAQ looked quite bullish.
Yeah, I think so. I mean, we're just in in a pullback right now where let me put it back here. No, not that one. We're kind of in a pullback right now where price is in a huge move down, right? Pretty much all last week, big move down. And then right now, and that's, you know, before that, we had a pretty decent move higher. So right now it's kind of like price is just taking a little reprieve move. So we've got this big move down and it's just pushing higher. And you can see that this move here is what we've seen. So far it's been above. So if we hold these levels, these swing lows, then, you know, we could be looking for a deeper move into this this area. So I think it looks bullish for now, but we are getting kind of a bit of a rest right now where we're seeing the ADX slow down. It is still quite high on the 100 range, so 37, but it has kind of turned a little bit. Still above the 55 EMA. Still looking pretty strong, just kind of, you know, easing into the open time. We have 40 minutes now, just under 40 minutes until the open. So again, this is kind of a time that, you know, if you want to take some time to start your trading day, if you haven't started taking trades yet, you can do some things to get your mind right and to get your mind and body aligned to get ready for the trading session. So somebody asked if I'm a medical doctor. I am not a medical doctor. I'm a psychologist. So my degree is in clinical psychology. I feel like this week might be red again. Now we are testing the previous support. Yeah, that could be. I mean, so if we're looking at the weekly time frame, so we have obviously had, you know, a long move upward. But now since this is actually November 2024, we've just kind of been in this like little range area. At first, it looked like maybe this was going to be a higher low and then a push higher. But in February of 25, I don't know why my screen isn't matching what you're seeing. I'm on the wrong one. Okay, here we go. So this is the weekly time frame. We've been pushing higher, and then we've kind of been in a little bit of a range here since November 2024. We put in a higher high, came back in. This was looking like it was going to be a higher low, but right in February, price came up. It kind of tested once here, came back down and tested again, made a little bit of a higher high, but never broke this all-time high here. And now price has pushed down. So at the moment where price is pushing higher, but really this is a lot of momentum to the downside. Even here, there was, you know, down move, a little breather, down move. Here it was a little bit of a down move, and this is pretty strong move lower. So what we might see, you know, who knows, not predicting the market, but there are tons of options. One option could be we have this really strong momentum to the downside. Maybe price takes a little breather and then we see a push lower. Or we just took out these weekly swing lows and price pushed above that. So took out the liquidity. We also have a swing low here, swing low here, swing low here. So 3 swing lows lined up kind of relatively in the same area, took out those 3 swing lows and pushed higher. So that could be a little bit of fuel to push price higher for a bit.
Yeah, I mean, what I see here on NASDAQ is just, well, we're in the range. I think that's quite obvious, but with this move we had now, I feel like we could also be like on the weekly, it feels like we're hitting support, but on the daily, I think if I can pull up my screen here and let's remove some things here. So on the weekly, I can put this level on, something like that, and then it's going to be like the weekly wick came below this level. Let's see, we can also incorporate that. So on the weekly, it feels like we're just in the range here and we're hitting that support. But if I remove that level and I go to the daily and I add a level here instead, then it becomes a whole different picture. Now what we're seeing is we had a move up into resistance. Basically, we had a move up into resistance here, rejection, and then a breakout, and then we started kind of reclaiming this as support. And this is the range, and now we're below the range, and now we're retesting previous support as resistance. So on the weekly, it looks like we're just in the range, but I think the picture becomes much cleaner and more clear on the daily, which tells us that. But I think this is where the other indices comes in as confirmation. On the S&P 500, we don't have this. Like on the S&P 500, I think this is that support where we had resistance and then started trading higher. So I think here we can use the S&P 500 as confirmation to NASDAQ, and the strength in the S&P 500, at least in my opinion, tells us that it should be this level we're looking at on NASDAQ. So I believe that in this case, the S&P 500 is probably leading the way here, and NASDAQ should probably continue higher. So we'll see, but
and it does look like it is, especially like looking at the 4-hour time frame. It does look like S&P is leading the charge higher. So that monster move down that you're talking about, big move down, and then if price is going to continue downward, it makes sense that it would come up a little bit into that range. So retrace some of that before moving lower. And definitely NASDAQ looks like it, I keep saying NASDAQ. Definitely the S&P has made a further retracement into that area than NASDAQ. NASDAQ looks like it's just barely starting to pop in there or peek in there. Whereas the S&P is, let's just measure. The S&P has already retraced, I would say, almost to 50%. NASDAQ is going to be less than that. I don't even have the measurement for that. I think about a third of the way. Yeah, about a third of the way. So definitely S&P is making a bigger move. And today is probably a really good opportunity to watch both and just see what, if that continues to be the way things go, that the S&P leads the charge, or eventually if it's going to roll over.
Yeah, because if the S&P 500 breaks above that level, like if S&P 500 starts moving, like this, then the NASDAQ should continue and at least hit those highs, because on the S&P 400 would be on the breakout probably up here when perhaps NASDAQ hits here. So I think, there's definitely interesting to watch the S&P 500 for a breakout and then trade that as long on NASDAQ.
It's a little bit clearer on the US NAS 100, but there are a couple imbalances that have formed. Do you use imbalances in your analysis at all?
No, I do not.
So there are a ton of imbalances that have formed to the downside. So where price has moved really strongly to the downside and left a space between like the first and third candle. On Friday, price created, or I guess on Sunday, price created an imbalance on a bullish imbalance for the first time.
I just opened your screen there.
Okay, let me put it back on. Okay, so this is the NASDAQ. Price has not gone too deep into the retracement, whereas if you look at the S&P is almost 50%. From high to low, it made it almost 50% into the retracement. And you can see there are a lot of bearish imbalances all along the way up until Sunday. So Sunday, we've got the first bullish imbalance. At the NASDAQ, same thing, bunch of bearish imbalances, has only made it about, I don't know, eyeballing it about 30% or so into that retracement there. There is, again, the first bullish imbalance that has formed here. And this was inverted, so inverted imbalance. So for right now, definitely the momentum is to the upside. At some point, we might see it spill over, but right now, price is continuing to push higher.
All right, yeah, that makes sense. All right, we see that we have Victor in the background.
Hello,
All right,
Victor.
what's up, Victor? Welcome.
Hello. It's my favorite psychologist.
Oh,
How is
thank you.
everyone doing?
Well, that's a lovely way to start the Monday. Thank you, Victor.
How is everyone doing?
All right,
today?
guys, I gotta jump out now that Victor is here. I got a meeting to attend, so I'm gonna have to run. But it
I
was.
hope you feel better.
Yeah, thank you. It was nice. It's great having you on here, and I will see you all tomorrow, and I will see you, Dana, next week. All right.
All right. Have a great week.
You too. Take care.
Have a great one, Jonathan.
Yeah, see you, Victor.
How
All
are
right,
you,
so-
Victor?
I'm better. I'm getting better, but it's taking longer than usual. So we gotta be patient, just like on the charts.
That's right.
How about you? How about you? How are
I'm
you
doing well. I also got hit pretty hard, and you're right. It took a long time to get over. Even I don't think my balance is back, believe it or not. That's the first
Wow.
time that's happened to me, where I got so sick my balance actually was impacted, and it still is taking a while to get back there. So I hope you continue on the right path and hopefully get better sooner rather than later.
Yes. Thank you for those best wishes. Too bad, and I'm sorry it hit that hard. I mean, your balance that sounds impactful, to say the
Yeah, it
least.
was weird. I don't know if I just never noticed it before, or I mean, it's not like just everyday walking, but like at the gym, I'm like, oh, my balance is a little bit crazy. So
Come on, there's a patient in the waiting room, Dr. Cole. The patient is asking for a diagnosis on the DAX. Are you familiar with, or do you trade the DAX usually? Is it something
I
you
do
look
not
at?
trade the DAX. We can take a look though. Oops.
Sure.
Which DAX ticker do you usually use? Not
I don't trade the
futures.
DAX as
Here we
well,
go.
but
Sorry?
no, I don't trade the DAX as well, but there are many CFDs. I think it's GER 30, if I'm not mistaken, the German index. Let me check if what I have here.
Yeah, I think this is this what DAX 40?
I got this one. This is the DAX. DAX. Which one do you have?
I think they
Is it
said
the same
DAX.
one?
Yes. Is that like
Okay.
the same?
Yeah, I think it is. That's
Wow.
the CFD that you're trading. Would you mind breaking that down for our viewer? What is it you're seeing? Do you see any opportunities or not?
Well, it looks like it's been a very, very bullish move in the DAX. I don't know. I'm guessing there must be some kind of news or something going on because this candle looks way larger than any of the candles in the recent past. And so that makes me think some kind of news is happening. Basically it gapped up over the weekend and is exploding higher. Now this is all-time highs. Let's put it on the weekly so you can see. So it has just gone above all-time highs and has really exploded above. So does anybody know? Okay, so there's German elections going on. I was just going to ask if there's any news going on that might have caused the DAX to shoot up like it is. This is not an asset that I trade, so I'm really not familiar with it. It's definitely, I would not want to short this. I can tell you that for sure. But if you wanted to get in on the DAX to the long side, it is rather extended. So for me personally, I would be looking for an opportunity for, price to pull back a little bit and then get in long. I think it's probably quite dangerous to short here because something is causing it to push really strongly higher. And, it has been moving higher for a long time. Maybe I should look at the DAX. This is a really nice, it moves pretty strong, pretty much trends to the upside. And then, there are these wicked pullbacks. This is 1 week to the next. So over the weekend, and you do see some gaps from week to week. So you'd want to be careful holding it over the weekend, but definitely very strong to the upside. Just is at the very, very top of the range. So to me, you could take it as a momentum play. I take those type of trades all the time. Take it as a momentum play, but you want to be careful about, if you're buying at the top or if you're thinking the momentum is going to keep going, you can always, sometimes it's nice to try and catch that little wave. And if you, catch the tiger by the tail, maybe you can ride it for a bit.
That sounds dangerous.
It sounds what? Sorry, what'd you say?
It's not. No, it sounds, but it's not, you say. We have people in the audience who are chipping in on their opinions, and I think they're right. Over the weekend, we had what is relevant for the German equities is, of course, that those European leaders coming together, discussing peace attempts for Ukraine. And one of those plans, and Paul says it's exactly here, one of those plans is to reinforce or have a better military strength in the European Union. And that means that the defense sector, of course, is going to get a lot of orders, right, if these plans go into fruition. And if we all know that the defense sector is a driver, can be a driver for many economies, and Germany is no different. So I think that's exactly what's happening. The election was some time ago, if I'm not mistaken. It was about 10 days ago or so. So that's probably that's not what's moving the market anymore, but more the plans and whatever economical implication and perhaps fiscal implication. Budgetary implication that these plans, these Europeans, these military plans or guarantees that they are wanting to offer Ukraine in this attempt to get a peace. So good stuff. I mean, that's the kind of movement you need and you want in your trading, right? This is momentum. Momentum is edge, right?
Yeah, absolutely. And like someone said in the comment here, this can impact the US market too. So it says the DAX follows Wall Street and quite bullish today. There was some news regarding Fed funds rate at 4.33%. And right now the NASDAQ is still pushing higher. I mean, it kind of took a bit of a slow pullback, but we are starting to see it perk up a little bit. ADX is starting to turn up a little bit, and we're about 20 minutes from the open now.
20 minutes from the open. I see. All right. So in the meantime that I was on break, I did take a small trade on my account. I was looking to get maybe I should show my screen. For that, I will have to stop what I'm showing right now. And I will be showing it shortly. Let's see. So this is my my account, and I got two entries here on GU as I was trying to catch that reversal. Normally I would wait much longer for that reversal to come to maturity, and that hasn't happened the way that I wanted. It hasn't happened yet, and to me it's too early to go and hold this trade too long, or much longer than it currently is. What I'm looking for is on the higher time frames. We have a reversal, or not a reversal, a bearish structure, and I saw on the 15-minute, for example, that bearish engulfing. That's the first sign that the sellers are coming in and they're trying to take over, and they did in those two candles, and they did it again here, which was after my entry. Actually, one of the reasons that I got in was, of course, that higher time frame area. The 15 minutes started to see some, or show some sign of wanting to reverse much a little bit, and we had on the 5-minute we had a bearish reversal here, or a candlestick pattern, a engulfing, bearish engulfing there. That was the reason for the second one. It looks very strong still in terms of the trend. So and actually, if you look at on the other time frames, on the 1 minute, for example, this reaction, of course, what got me in, because here we had just a 1 minute quasi. It's not a huge reversal pattern, but it is there, and the market did react to it nicely. So here we have the last order block. Maybe I can drag it. I don't do my analysis on MT5, so it's a little bit less. See, I'm moving my stops there, which is not the idea. This is the order block on the 5-minute, and what did price on the 1 minute? What did price do? It came back to it after it created it, and this price action tells me that it reacted favorably to that order block, right? It's a bearish structures. You want to be having bearish reaction to it, and that's the reason I took the first trade, and then we got another. We got here let me use this line as an indicator. That impulsive move was what I was looking for, and then the second time we had bearish reversal as well, a bearish order flow, I should say, piling up or building up, which is exactly what I wanted to. So I entered. Of course, it goes against me, but it did not take me out. My stop was it was going very close to my stop, and this would be the first target, right? That low right there where we just checked. So right now I could be taking profits off the table. I could be closing this off, and I have these shorts, TP much lower. In this case, I'm inclined to take some profits off the table, because the higher time frames, like say it hasn't shown us a very matured reversal. This is almost nothing when you zoom out. So if that's the case, I would take that one of those two trades off. It's heading that TP, not TP, but first mental TP, and then I'll leave the other one for a possible move lower. I am aware that since the reversal hasn't matured yet, that this could be just, a little retrace, a little pullback until it just continues higher. Because actually, I think there's more room for it to go peak a little high, even though it's very extended. You were mentioning, I think in the background, I was listening, you mentioned, I think it was one asset being overextended, right? Was it today you mentioned?
We were talking about DAX being overextended.
Okay, you were talking about the NASDAQ or DAX?
DAX.
Okay, DAX. Okay. Well, the pound dollar as well it's about 140. I don't know. I didn't check right now, but earlier it was at 140. It's ATR, meaning it's quite, and there wasn't any high impact news as in scheduled. So that doesn't happen very often, and that's something we need to listen to. Typically, when you have such a strong move in one direction, it doesn't just change direction in one time, in just one move, meaning it typically starts creating a reversal pattern on the lower time frame. It then goes back, retests it, and sometimes breaks it, and it creates a second reversal pattern. And maybe the second one is the one that actually reverses price, but maybe sometimes it needs the third one. So it takes some time, and we've only seen just this little reversal pattern on the lower time frame. It's the first one, so it's too early to say this is going to be the trade of not the trade, the reversal of the day. I'm gonna put your screen again, if that's okay with you, Diana, because I'm gonna switch back to my switch back to the trading view, which is where I do my analysis, and which is much better.
So much easier to mark up there.
It is so much easier. So the idea of this is the same asset. It's the pound dollar. What we have here is we're getting into on the daily time frame. We got into a couple of days already into a reversal, not a reversal, a bearish structure. And we had a proper price action, that move down that we had on Thursday, that could be that is actually an indication that the market responded to this fresh bearish entry order block on the Quasi. So this is a retest of the order block that it just left, meaning I would expect price to go much lower, but the thing is, timing that top is tricky. So if we go lower time frame, we see that we do have a Quasi from this level. There we go. That's the level. Actually, I had the analysis on this price feed, and this is what got me in locally, right, without considering everything else on to the left and the higher time frame. And that's exactly where we are. But as you can see on the H4, on the H2, on the H1, it doesn't really show me yet that it wants to reverse. So, to think that this is the reversal point is very too optimistic in my point of view, meaning I need to close this position probably earlier than later, and the chances of it hitting that TP is not very high. Actually, I'm considering closing all of it, but I'm gonna go to the lower time frame to see if there's anything that I could use to test if price is going to go much lower. With the 5 minute, for example, we haven't broken any structure. Well, this was the neckline, so we did have a structure, but we didn't have an order block. Let me double check this. This is the same price feed that I normally trade. Yes, we did have it, and this needs to hold, in my opinion, this order block, if we are to have some significant move to the downside, soon. If not, then we're probably going to be making higher highs, because that's the structure that price left in its wake. So I think if closes above this order block, that I should just take the trade off, whether it's in profit or not is not important at that moment. All right, so that's my trade on GU. Are you in any trade, Diana?
I'm not at the moment. We have about 10 minutes until the open. I am watching the NASDAQ. It is ADX has started to increase on the NASDAQ, and it is kind of hovering right now, but is looking kind of bullish. So I can switch over here so you can see. And there's some questions about gold. I was trading gold earlier today. Both gold and the NASDAQ are looking bullish to me. But in particular, gold has kind of settled down for a little bit. It pulled back, had made this really nice move higher, and then took a pretty hefty pullback to the 55 EMA. And it's just kind of stuck to that EMA right now, just kind of moving along. But at the same time, ADX has really gone down as price moved lower. So to me, that's kind of a bullish sign that when price is moving higher, ADX is climbing. As price is pulling back, ADX is going lower. So at some point, if ADX picks up on gold again, then I would be interested in looking for a long opportunity. It looks like it'll be a long opportunity. And on the NASDAQ, same thing. ADX is fine, just looking for the opportunity to get in, but we're 9 minutes before the open, so not really the best time for me typically to get in a trade. I'm typically better off waiting until after the open. And then also at 10 a.m. today, we do have high impact news, ISM manufacturing PMI. So if a trade presents itself, I will take a trade before that, but just looking for everything to kind of line up before, either like the perfect setup right before the open, or most likely waiting until after the open.
I see.
But to answer the question, I definitely still think gold looks bullish. I just want to see a little bit more from the ADX to kind of tell me. Somebody had mentioned I'm doing both long and short on gold, and it's staying between $20 on my trade. I think what you're saying is you trade both sides, long and short of gold, but it's not really going anywhere. And that's just because, as far as I'm looking at it, it just isn't really, it's just kind of in a chop zone right now. Especially since like 8 o'clock this morning, since we've been on, it's just been kind of chopping around. And so ADX is what I use to kind of tell me when that chop session has subsided and now price is moving directionally. Right now it's at 11. And for me, 20 is the threshold I use. So that means that ADX is really low.
I see.
And somebody's asking which time frame am I using ADX on? I don't know if I can share my screen right now. If
sure.
Is
this one?
Let me see which one I'm on. Okay, so for ADX, I'm actually not using. I am not using. I think this is not the one I want. Let's do this one. I am not using a time frame. I'm using a non-time based chart. So I'm using 20 range and 50 range for gold. So here's 20 range and 50 range. This just takes out the element of time. So we're just looking at how the asset is moving. So you can see here as the big push up in gold, ADX is this blue line down at the bottom. And as gold was pushing higher, ADX stayed high until it did this little like pullback here. ADX lowered, went back up as price moved higher. And then as it pulled back, ADX significantly moved lower. So it had been as high as like 35. And as price was pulling back, ADX has sunk lower. So to me, that is kind of an indication that price kind of wants to move higher, and ADX should start to push higher when we see a stronger move. But for right now, it's really low, and that coincides with this like really nasty chop that we're seeing at the moment in gold. But if we look at, let's pop over to NASDAQ. And for NASDAQ, I use 40 range and 100 range because price moves a little bit more on the NASDAQ relative to the gold. So you can see on the NASDAQ, we're 5 minutes from the open. On the NASDAQ, we are prices, pushed strongly higher and then taken a pretty mighty pullback here as well since about 7:15 and has kind of been moving sideways. So ADX on the 100 range chart is still pretty high. We have 29.27, so well above the 20 threshold. And it's kind of moving back and forth on the 40 range. So it had been higher as price was doing this move up, but now it's kind of dipped below again. So will be helpful to see how things go in 5 minutes when the New York Open starts, or when the New York Open happens. And then again, we have news at 10 a.m. Eastern time. So we'll be keeping an eye out for that. If the ADX will pick up after the open happens, or if price just kind of stays a little sleepy, maybe until after the high impact news. And this is NFP week. So I always feel like this week is a little bit different than other weeks because NFP will be on Friday. Excuse me. So something to keep an eye out for.
No problem. Yes. And if NASDAQ is in the wake after the open, then we wake him up.
Yep.
That was a silly joke right there. No, but someone asked in the audience, what about the pound dollar? And I think we have about 3 minutes before the open, so I'm gonna steal the image, the screen a little bit, and come back. Actually, I closed the position for everyone who was wondering. Yes, we can see clearly. My stop loss was around here, something like this, but it was clear that this was the structure that price needed to hold. If it's actually, this is any significant start of a move, it was supposed to, it did revisit that low, and if it's going to continue to go low, it should be making something in this way. It shouldn't be going much higher. And as soon as it did, I took I closed the position and I took a small loss here, right? So, and I had two positions on. One was in TP and the other one was in smaller than 1 hour loss. So on both of them, I'm positive, albeit by a little bit. All right, so that's GU, but I think the viewer wants a much broader view of what's actually happening. If you see on the higher time frame, we are getting into those structures where price is, sellers are supposed to come back to the market, and they did on Thursday. So the question is this order block that was created by those sellers that came in, is it going to hold today or maybe tomorrow? Because that will depend what kind of signal the market is giving out to traders. If it isn't able to break above and close above this order block, then we're probably gonna see higher prices, and perhaps price needs to go to the next structure before it has a chance to reverse. So that's going to be the question of today and perhaps tomorrow. But looking at the momentum, you can already get an idea that this doesn't look to wanting to. If it continue like this, it's not going to stop. It looks like this is going to go much higher. You can see the difference, that momentum, how it is pushing much higher. We need more information, but it doesn't look at all that it wants to reverse. So we need to follow price action. And if it wants to go up, then you follow, or you at least don't short it. So that was that was very nice. On on the hindsight, of course, I should have taken both of them down out, but I thought it was we had a good chance of going a little bit little bit lower, perhaps to that lower border of that order block, which didn't happen. But the open is about to happen or already happened. So I'm gonna switch back to you, Diana. What do you see on the open? I'm gonna show your chart to see if there's anything we can see. Do you usually watch the open like on the minutes, like the very first action, or is it all noise to you? You're muted.
Sorry about that.
No problem.
I basically watch from the start and am just looking for an opportunity from the start. So, you know, I don't typically take a trade right at 9:30, but I am not opposed to it either. You know, usually it takes a few minutes, and it's kind of nice if we get some space and distance between when I take a trade and when the market opens. But, you know, it just depends. Right now, we're seeing gold, the actual price action, pick up. Actually, let's see, the NASDAQ. Let's talk the NASDAQ first. So the NASDAQ, we have ADX is above again on both the 40 range and the 100 range. And it is starting to move a little bit lower. So let's see here. Yeah, there's just a lot of activity around the open, and so it can just be a little bit chaotic and easy to get stopped out. So sometimes it can be helpful to just kind of wait for a few minutes, but you know, you got to just go with whatever your system tells you. And on gold, we're starting to see gold pick up quite a bit in the price action, but let me move down to gold. And on gold, I'm on 20 range and 40 range. You can see on gold, we're seeing ADX start to pick up, but price has picked up significantly. So we'll see what happens here. Just kind of keep an eye. Things are looking pretty bullish across the board, looking at NASDAQ and gold. So could be an interesting morning.
Yes, indeed. Morning. I always forget that.
Oh yeah, that's right. Sorry. Interesting morning for me. Different time of day for everybody else.
No, it's. I mean, it's a great morning for a lot of people. I mean, but when you mention it, I remember that that you're actually with us very early in your day, right? Because it's early morning for you. So that makes it extra special when you come on, Diana.
Oh, that's sweet.
Because it's
early. It's 9:30. So, wow, we're starting to get a pretty big pop in NASDAQ here.
And gold as well.
Gold as well. Yes, both are moving higher. Starting to get a little pop in gold. ADX on gold is still a little sluggish on the lower range, but it is not on the NASDAQ. It has started to pick up on the NASDAQ now. Well, it had been above, but now on the lower range, it is above. So we got a little pop higher above those swing highs. Let me put you back on NASDAQ here. We got a little pop higher, and then price is turning down again. I'm going to put it back on the time-based chart so we can see it a little bit better. Okay, so we had a pop above this 15-minute swing high, and then it dipped back down. Let's see if price will continue higher.
Do you trade the open, as in open range and so on?
I don't use the open, you know, opening range as part of my the way that I trade, but I look at a breakout above. But that's not I wouldn't say really part of how I trade, if that
Okay.
if that answers your question.
It's an indication, but it's not your setup.
Right, exactly. And somebody in the chat is saying, look at gold. I agree. Gold looks great. For me, just still waiting on the ADX to pick up a little bit. It looks like it should be well above 20 just based on how directional price seems to be moving, but it just hasn't come together yet.
I'm going to switch a little bit for a little while to the to gold on my chart, and we've talked a little bit about this earlier, that we it has been very bullish gold on the higher time frames, and on the H4 we did see a very nice V-shaped recovery from last couple of bars. So we are in that reversal area, and the possibility of a bullish engulfing, it hasn't been printed yet, so we can't trust it, you can't use it, but this is already showing that bullish engulfing, and that typically when it takes out the high of the open of the previous bar, you typically see, if there's going to be a bullish engulfing, you typically see momentum picking up, and that's exactly what we are seeing when it takes out or is above the high, the open of the previous bar. Let me mark that out, and you can see how the market reacts to it. I find it very fascinating all the time. That's the open of the last candle on the daily time frame. If you go to the lower time frames, you can see how today it reacted to it as a resistance. Very, very technical, textbook example of how the market reacts. This is why I trade the way I trade, right? Using price action, because it's so cleaner, so clean, not cleaner, but clean. And today not today, but right now you can see how after it breaks it, it looks like all hell breaks loose, and it's going to, explode to the upside. And if you combine this with what we discussed today on the H4, let me check this a little bit. If these two lines were which is based on the ATR. So based on the ATR, if today is going to be an average day, price is likely to reach one of those, and sometimes even exceed a little bit, but get very close to these levels by the end of the day, or the high of the day, I should say, and the low of the day, the extreme of the ranges, not the close necessarily. And by using price action, we can already get a sense of which of the two it's going to be, right? It doesn't take a rocket scientist to see that that gold is very bullish. And so if these two are the options, right, so far, then it's likely to be this one, right, the upper one. So if you can use that information to your advantage and look for entries. And as I was saying, one of the entries is waiting for price to get to one of those order blocks, a demand area, and then you enter, right? So that could have been on that wick that came down. Of course, on the lower time frame, it didn't show you much in terms of reaction. It was very difficult to catch if you were to catch that. If anything, you could have perhaps used a quasi on the lower time frame to do so. We didn't do this while it was happening because we weren't trading this asset, right? So you mark this up and you indicate what order blocks, entry order blocks on this time frame make sense, right? And you can see how the market comes very nice to them. There are more, of course, but that's the first one. Let me put it more precise. That's the first one below that 50% retracement. There are at least, let me see how many more there are. There's one here, and there is another one here as well. And that's it. So we have three order blocks, and it used the first one to, expand and continue its reversal, its uptrend, right? That's the way to do it. Waiting for price to come to a demand area, and waiting for certain structures to be tapped into that make sense for price to change direction. And that's exactly what it did. This was during my break. But that's a very, very strong move, a bullish move, very impulsive. Awesome if anyone caught that.
Mhm.
How's NASDAQ going, Diana?
Yes, someone commented, wow on NASDAQ, and it is indeed just plummeting, moving quite strongly to the downside. So basically price took out that 15-minute swing high and then absolutely reversed. So, that's why you got to keep like nimble and be ready to change your view at any time. So I was looking to take a long, but now, the momentum is very strong to the downside. I would definitely be switching my view on this one.
Someone Locke entered a long position. Well, it doesn't say if it's long or not. He doesn't say that, but did enter a position on gold on the 1 hour 50 EMA. I suppose it's a long, but especially also because he mentioned EMA, meaning it's probably a trend-based. Well, it can still be mean reversion, but it's probably with the trend, meaning to the upside. But confirm that with us, Locke, if you're in the chat with us. And for everyone else, if you like our stream, hit the like button. Do us a favor, hit the subscribe button. Let us know that you like this content and that we should keep on going with this direction, with this content, that this is helping you and you're improving your trading skills by spending time with us during these streams.
Yeah, that was just what I was going to comment on. How NASDAQ and gold often tend to go in opposite directions. Absolutely. And right now we're definitely seeing that, where gold is pushing higher, NASDAQ is pushing lower, although it had been moving quite strongly to the downside and it's taking a bit of a breather. But absolutely, that happens fairly regularly where you see them move opposite.
Dow Jones, you mean, right? Dow Jones and the NASDAQ?
Gold.
Oh, gold. Okay.
Oh, sorry. Oh, no, you're right. Okay, I'm sorry. I'm talking about something different. Oftentimes, I also see that happen in gold and NASDAQ, but you're right. The comment does say Dow 30 and NASDAQ.
Typically, they all move in tandem most of the time, right? I mean, it doesn't happen very often where you have a lot of divergence, lagging, leading. Of course, there is some difference relative to strength, but they're not going to go in the opposite direction, do they? Not very often, at least.
Not the indices. No, I mean you can see divergences that happen, but oftentimes that's why I think I read that as gold, because in gold you often can see that happen, but a lot of times they aren't divergent, the different indices. Although it can happen for various reasons. We talked about that today in the NASDAQ versus compared to ES, where there are kind of subtle differences. Definitely you can see that at times. But oftentimes you'll see gold and the NASDAQ kind of go in different directions. Again, not all the time, but that can happen. Right now, gold had been moving really strongly higher, and it's kind of lost its luster a little bit, and it's starting to push, maybe not push lower, but is pulling back slightly, pulling back somewhat. As the NASDAQ is continuing lower. Again, news coming in 15 minutes, high impact news. So that's definitely something we want to pay attention to and keep an eye out for.
That's the manufacturing PMI, and it's a high impact dollar news. There's also an orange folder news coming out in 30 seconds, which is the final manufacturing PMI. So it's not the ISM. The ISM is in about 15 minutes, as you said. The orange folder, of course, isn't a isn't restricted on the high stake account, but the red folder, of course, is. So in 50-minute, if you're on the high stake account program of the 5ers, take that into account. You're not allowed to open any trades 2 minutes before and 2 minutes after that time. Yeah, that's a very interesting open, to say the least, on NASDAQ, Diana. Are you looking? Where would you be looking for a short if you were to look for a short with this open?
Yeah, I mean, at this moment, the ADX on NASDAQ is back quite low again. It's 12, now it just popped up to 14, 16. Okay, so now it's climbing. But I wouldn't be interested in taking a short anywhere until it starts to show some directional, 20 again is my threshold that I'm looking for. So I would more be interested in wanting to see it show that there's directional movement lower and that price is going to continue one direction or another. Because now again, it's sort of chopping around here. And let's see. So here is the 15-minute. We took out that swing low, strong press lower. It would make sense to see price come back a little bit before pushing lower again. So if that were to happen, I mean, we could draw, just to give us an idea of where price is, a little Fibonacci here, just as a measurement tool. We have an imbalance here. An imbalance here right at the 50% level. So that could be an area where it might make sense to get short if we start to see price, reverse from there. Right now, it just seems a little bit messy. Gold had been pushing strongly higher. Now we're starting to see it roll over pretty dramatically. So to me, I'm kind of like, I might wait a little while until we get the next round of news out of the way. And then there is no further news after that for the day, and just kind of see if price picks a direction at that point. Because so far it seems like there is quite a bit of, even though price is moving, like for example, in gold, you could make a strong argument that it's moving higher, but it's like these pullbacks are enough to get you stopped out. And that's one of the challenges. It is moving higher, but you have to be able to either enter at a really optimal point or sit through a pretty dramatic pullback. And already on the NASDAQ, at least at the charts that I'm looking at, price is starting to cross the 55 EMA on the 40 range, and it's right at the 55 EMA on the 100 range. So kind of a good point to just hang out and see what happens.
The fact that it's reaching those EMAs, what does it tell you? Does it tell you that we could see some buying coming back to the market from these levels?
It just kind of signals to me, like, let's talk about the NASDAQ, for example. So on the higher range, the 100 range, it had been above, so kind of looking quite bullish this morning. So from about, 4 a.m. until about 8:30, it had been looking pretty bullish. Then it kind of like moved sideways a bit, kind of choppy, just kind of consolidating a bit, but like kind of slowly drifting towards the EMA. So if it hits the EMA and then pushes higher, it's still looking bullish. It crossed below the EMA, and instead of continuing, it pulled back. So that could be an area where it would make a lot of sense to get short. And so that's why, that's a fairly significant point. But with 10 minutes till high impact news, it's kind of like we're in a little bit of a difficult, a difficult spot.
Yeah.
Because you don't want to be trading over high impact news necessarily. And so we just kind of have to see what happens here.
Yeah, you mentioned imbalance a little while ago. Do you use imbalance, and what exactly do you mean by imbalance? For those who are at home, what do you mean by it? How do you use it?
I pay attention to imbalances also called fair value gaps. An imbalance is basically a 3 candle formation where, like, for example, here on the 1 minute, we have the first candle, second candle, and third candle. And when price was really strong momentum to the downside, it moved so quickly to the downside that it left this space where price never came back in the second candle. Those can be areas that you can use to kind of give you a sense of, where price might come back to. And so that can be helpful to pay attention to, or to use as part of how we talked about consistency in your trading. That can be a part of your system that you use to give you some extra confluence and consistency in how you enter and how you kind of assess what's going on in the trade. So now looking at NASDAQ and gold has started to push higher, but then kind of petered out a little bit. And then NASDAQ starting to look like it was going to roll over again. I think, with the high impact news coming, it's a really tough spot to be able to, assess if 9 minutes is enough to kind of get away from your entry, that it would make sense to take a position here. We're kind of in a tricky little spot.
Do you typically, how long do you wait until the news is over do you have a rule? Do you say, I'm not going to trade the first, the last, and 5 minutes before and 5 minutes after? Or how do you handle that, high risk moment? And go ahead.
I would say I don't have a firm rule for high impact news, although I do generally keep it really strongly in mind and avoid, just because there can tend to be a lot of chop that happens around. So, like, for example, the NASDAQ looking like it was moving really strongly lower, and now it's coming back up again. And so that's something that you often see right before these high impact news events. So something to pay attention to. Now, if it comes to the top 3, I kind of like to think of them as black folder news events. So NFP, CPI, and FOMC, I absolutely treat those as like super serious events that I want to be away from and not trade. I know the 5ers has a rule of 2 minutes, which I think is a great rule, but even more than that, a lot of times leading up to news, I tend to see a lot of false signals where it looks like price is going one way, and then it's going to come out and take out the other direction before continuing on. And it just gets to be really choppy and difficult to actually like catch a wave. So in general, I just kind of find those to be good areas to avoid, although sometimes you can get in there and things really go in your favor. So not a hard rule, but generally doesn't work out. It doesn't usually seem to be, the expression, the juice isn't worth the squeeze type of thing. Sometimes it works out, but a lot of times it's just not worth it.
I've never heard that expression, but I find
Really?
it very amusing. Yes, I think you're absolutely right about the high risk moment of high impact news coming out, because indeed it's a lot of risk, and sometimes it's not very easy to capture that edge, or in relation to the risk you're taking, it's not always as valuable, or isn't worth it. But we have someone in the background who is patiently waiting, I should say, not anxiously, patiently waiting for a Dirk. I think Dirk has welcome, Dirk. There you are, Dirk. We have
anxiously and patiently. Yeah. First of all, sorry to intrude your live stream here so much, and Diana, pleasure to meet you. I think we didn't have a pleasure yet.
Nice to meet you also.
So I said earlier, I would pop in again if I see another live trading opportunity. So I just entered another trade not long ago, and I thought I might towards the end of today's live trading session shared with you guys. So here again on gold, I got a confluence signal here, double top on gold, which why I entered here on 2881.84. Let me quickly show you that trade also on the MetaTrader. Hold on, need to switch here again very quickly. Oh, where is it? Here we go.
Take your time, Dirk. No problem.
Here it is. So you can see here 2881.84. Just a really quick one. I have a take profit here, which almost was hit instantaneously, I should say, here down at 2874. Moved my stop loss now already into profit again, like I did earlier. So it's really the same game. I said earlier, I know, but I don't fancy very much taking the short trades today in gold because the overall setting was quite bullish. But if I get like this price confirmation double top from my indicator, that's normally really a solid sign that we at least going to get a partial reversal to the downside. So I thought, I'm going to take this trade just with a small position size here of 0.1 lots again in gold. As you guys know, I'm still getting used to trading gold, finding my way there. But since you guys still were online, I thought it's worthwhile sharing. Sorry.
And thank you for considering us, Dirk, and sharing that great trade you're taking. Awesome. I think everyone, because gold is so popular with our audience, I think they're enjoying seeing your trades as you take them. So thank you, Dirk. Thank you very much. And I think we are getting to the end of our stream, guys. So don't forget to hit the like button, subscribe to our channel if you like our stream today. Tomorrow we'll have another one. I invite you to get on to that stream as well. After the stream, we will have workshops on the Discord community. So on the server, if you're a member, a part of the community, hop in. Don't let that chance pass you by. And remember, we have the MasteRisk event coming up the 11th of March. It's going to be great. We have experts speaking, 8 experts. We have many presentations for you ready to polish your skills, get them in shape so that you can become a better trader. Don't miss that out. There's so much value for every trader in there. Diana and Dirk, do you guys have any last comments before we wrap things up?
I would just say, if you are interested in learning more about trading psychology, you can pop over to my YouTube channel. I have a ton of helpful information there on how you can make some improvements on that side of your trading. I'm also going to be starting a program in April. I don't have it fully set up yet, but you can find it on my website, drdeannacole.com, or on YouTube as well. Thank you so much for everyone in the chat. It makes it so fun when you're so engaged and you ask so many great questions and comments. We really appreciate you being here.
Perfect.
And my last word is listen to Diana, learn about trading psychology. It makes up at least 50% of your success in trading.
Awesome. Thank you so much. Everybody have an awesome week.
Dr. Deanna Cole, Dirk, thank you on behalf of our audience. Thank you for being here and sharing everything you've done, you've shared with us today. Everyone at home, we see you soon again. Bye-bye.
MasteRisk free online marathon is going to start super soon. 6 sessions, 8 experts, and 6 live hours. So on March the 11th at 9 AM GMT, we are going to start with all of the risk management topics covered in one full day of practicing strategies and live demonstrations. What's going to be included? Free exclusive resources, a new account exclusive for the event, and 15 10K high stakes accounts up for grabs. Now the first 5,000 people that register will get access to an exclusive contest. So go below, join now for free, and we'll see you there.